April 18th. We're going to be streaming stocks, options, futures. I'm late. I was just staring at BBY's pre-market chart, thinking, wow, that's a nice looking chart still. Still very bullish. All right, get a little Yaz going. Get set up here. What we got? Market had some rip rally pre-market. BY pretty solid gap up here already. Only, I mean, it's 11.5%, like not huge, but yeah, pretty strong. And the volume was crazy. There was a million volume right here at 8, so not sure if that was, I'm assuming that was like extended hours, people with limit sells, buys. It's like more sells than buys. A lot of brokerages don't let you trade extended hours until 8. So maybe what all that volume was there. Yeah, I'll be looking to pick up some more on this reversal, it would appear. Good. So maybe a dip out of open, and I'll grab some there. Probably have like five buys today. Break up into 5 increments. Try and be patient with it. Ripping back up to the pre-market high at 32.20. Yes. Picked up some more nat gas contracts. I actually timed the dip perfect on it, but I didn't hit the ask, hit the bid, and it just kind of went away from me. There's the kind of breaking through that pre-market high. 15%, man. Yeah, I think this thing will be back up, filling that 50-cent gap pretty quickly, and then back to that 80 resistance. For too long. Hey Damien, hey SHF, hey Saul, hey Jan, hey Rally, Juan. Ooh. Here. Okay, little tweet there. I'm liking MCOM. I think it's kind of reversing now here too. Okay, thank you guys for your support, your retweets. Got those. Tweet out. Put the link in, Discord link in chat for you guys. I'll pin it. If you guys aren't on our Discord, you should join. SPY ripped through all those resistances. 416. Got my nat gas contract, so probably not trading ES today. And then I still want margin, or buying power rather, for some more Bed Bath. Do you think we've hit a bottom finally? So in good fashion, picking it back up at 30 cents, which was that the last place I sold it? About, yeah, on that last engulfing. Which I said that'd probably be the case. I need the momentum to be there. So yeah, here we are. About 7 minutes. We'll see. I might do a quick little order in the morning if we do get a little drop down here to 30 cents. Then probably wait a bit. Might get another day like this where we just kind of rip out of the gate. And then I'll be waiting for, you know, some sort of dip consolidation out of support to pick up more. If that's the case. And price levels for that would be probably that gap. That's a little high, but we might get there today. 37 cents I see as next resistance. Got like maybe 40 cents. There's just such steep dropping. There's not a whole lot really. It's kind of a vacuum. I feel like up to 80 cents. So see where it slows up. Anywhere. Positive net delta on BBBY yesterday. Nice. Test close, you don't leave a gap. Maybe. Yeah, just below 30. I feel like we could leave a gap. Splits are still a thing. Yeah. And so are rallies into reverse splits. So, but we don't know if they're gonna have it yet. We don't even know what the vote is. We don't. Very early. Nice rally, well done. Little after hours trading. You scared? Pretty cheap. You don't have to feel like you're chasing. This is what happens. Goes down for months and then starts going up. Thanks guys for likes. We got 8 of them. Well done. Got some JWN leaps. Nice. I didn't get leaps. We should have gotten leaps. 8 likes. Thanks, guys. Things play till 50. Yeah. 50 cents or 80 cents or $1 or $5. Yeah, I saw one of you guys speculating on Zip Trader's vids about China. I didn't see it. I haven't seen the one about SPY either. Morning, Dennis. GFAI would be nice. I have a small position in it. It's small. BBBY setting up a bull flag here, pre-market. Crazy. About 4 minutes to go. Morning, Mo. Highs coming down a little bit here. So I thought SI earnings were after hours. Apparently not. MCRB has a nice little gap up, 5%. Riding this wave until they're pretty I might close out before it. We'll see. Maybe close a portion. I think MCOM might also be kind of at a bottom here. It's funny that the timing on it is very similar to Bed Bath & Beyond. However, they've already had the reverse split. Got some bullish indicators that it is reversing. See on that one. IONS, that's not it. Still grinding up. Has a nice looking chart. Good for run up maybe. GTII. GFAI, those are kind of our swing shares we're doing. I wish I would have opened or left some of my SI position open. Didn't want all the exposure for earnings, but lo and behold, it hasn't happened. Goldman Sachs down nearly 2% pre-market after lower profit. Those Goldman Sachs, I guess, didn't have the best earnings. There are no signs of weakness in movie theater visits. The weekly data for box office grosses is rising and now above pre-pandemic levels. That's surprising. Stocks saw biggest rally in earnings season since 2009. BlackRock assets under management are set to exceed 15 trillion in 5 years' time. What? Okay, 2 minutes. Oh, that's working now. Nice. 12 likes. Thanks, guys. What are your plays today? What are you looking at? We've got a couple looking at GFAI. Of course, we've got some BBBY. It's 75 cents today. Woo! 75 cents. Yeah. Could happen. Canetta. It's an AI one. Look at that chart. Oh, another biotech. All right. Okay. Fubo. Yeah. How's Fubo been doing? It looked good a few days ago. Almost got a position. Still kind of hanging out, so might not be too late to grab some on that. I almost got a position that I saw engulfing candle, and I'm like, hey. But price actions look pretty solid. Looks like it's in a nice uptrend. Ding, ding, ding. There it is. Whoa, big flash down to 28 cents. Wish that was my fill. Fill? Okay, this thing is being stupid. Why are you in my futures account? Day trade buying power just erased. This is annoying. There's 33 cents. No dip out of the open. Just ripping right now, 20%. 20 million volume. Okay, I put in a couple orders. I don't know if those are going to fill. I'm confused on what's going on. Try and be patient. Big flush out of open. SLGG up 44%. Buy put entry for SLD. All right, I like that. Smack it up, flip it up, rub it down. It sticks around. Okay, kind of wicked up there to 33.50. See if we get kind of a retest here. Playing a little different game than yesterday so far. Bit digital? Is that what's the ticker for that? Ace Ventura with the octopus squid. Alright, let's see where we go with this. Looking like it wants to retest. That wick up there was definitely some resistance. There's 30 cents it's getting down to. Gotta liquidate some other stuff. I like SMX. BT. Oh, interesting. Close SI for now. So, okay, close out of SI. Their earnings are coming up at some point. Pick up some shares on PD now. And I'll wait. Like to see 28 cents. Maybe even a test down here at 27 cents. Look like some profit taking at that 8 a.m. pre-market. All that volume. Look like there. News on SLGG. Brands group shares. Landvault and Super League announced strategic partnership to provide brands with scalable solution. Partnership with Landvault. Excuse me. Paid trader. Jeff Brands up 5. Turka up 5. Just pulling through his last in, first out. Airbnb up 4. Do they have earnings? He has 4.8. Yeah, I don't think this is going to get the gap fill, Gina's. Been looking like it found a bottom here. If anybody wants to ride GNS, that wave is starting probably. That Bath up 9.5. down a bit from open. Did leave a gap down here to 28 cents. But on the longer time frames, it looks like reversal has begun. Starting to build that little inverted head and shoulders here. Volume and price action the last 2 days has been pretty solid. Or really just yesterday, I guess, so far. And after hours. Yeah, volume was like third most volume it's ever had. Second most. Second most volume ever traded on BBBY. We might get our gap fill first. B coming down a little bit. IONS coming down some. UTII is not trading. GFAI, this thing looks pretty primed also. Been like 4 or 5 days of consolidation. Same deal did back here. Kind of holding up on that trend line. 9 moving average. $500 million volume for today at this pace. I don't know if we're going to keep that first 5-minute volume pace. It was just orders getting filled at open. But yeah, we could have a lot of volume again. It'd be good. Green day with you know, another big volume day, more confirmation. Yeah, 47 million already. That's crazy. Yep, the share price is quite cheap. Is true. Put a limit for 28 cents. $28.81 maybe. That pre-market low. LG holding up its gains. If I didn't take the profits there, this thing's been crazy. Video with a gap up? What the heck? What's the word on this? Just a little blow off the top, maybe. There's so much news on these tickers, it's like you can't even find out what's going on. XLV. Is this fitness program? Is there AI in that description somewhere? That was me. More Bed Bath shares. Just going slow, real slow. Trying to appease the FOMO by buying, but tricking myself because I'm not buying many. Machinery AI bad news. Yeah, it's definitely finding resistance from yesterday's high at this point. So a break of that, kind of what we wicked up there this morning, but rejected it pretty quick. We'll see. It looks like it might retest something lower. I don't know. Just how it's kind of not breaking this 32 cents. Might get a gap fill. Well, this is over. That was it. You guys make a lot of money? Did you have a lot of fun? Yeah, we can check the L2, sure. There we go. Yeah, that's definitely a little resistance there at 32 cents. 32.20 thereabouts. Whoa. That candle just popped through there. Oh boy. We might not get a gap fill here. No, I think it wants it. I'm not sure. Doesn't look like it wants to go down though. Yeah, it's starting to get a little poppy to the upside over that level. Bouncing up to VWAP, or up from VWAP. Keep kind of picking up more here and there. Trying to be patient though, because it definitely rejected this level a few times. Yeah, it's above it, 32.49, up 16%. This might explode here. Trying to liquidate some more stuff and let's see. Yeah, there's a 5-minute candle over it. So it's breaking through that level. Yeah, see if it uses support here. Yeah, SMS with a little candle up. Saw that. Or SMX rather. I know I'm looking at having an order to close these, but because I mean this thing, I think BY could rip also. This is 50% quickly. It's so liquid. Closed out of some of the biotechs. They've had run-ups. I guess it's not a sure thing that it's going to gap up 50% after their announcements, so getting a little cash available. Nice rally, well done, man. Yeah, we've got a high VWAP up here too, so it's looking like it wants to stay above there. The volume this morning is crazy, 61 million already. It's been 30 minutes, it's been 20 minutes. The DFLI was another zip trader mentioned the other day. I had this gap up. Sell off. Looks like it's picking some steam back up though. Up 6%. LGG holding up pretty well. Sort of. BBY is holding that 15% level. Liking it. Yeah, it's holding above there. I'm gonna pick up some more. Twitch peoples. They're like alt. Yeah, alt still looks really nice. Nice uptrend here. Hammer candle. It's not great looking, so see if we hold VWAP. Up 4. Man, it's been hard not to just pick up shares here at BY. I mean, it's not like, yeah, it's just trying to get the best price at this point. So, pretty firm believer that we saw the bottom, at least before split and all that. Like, once the split happens, you know, it's possible we have a sell-off on the split, a few days after the split, whatever. But yeah. Highs below VWAP here. Recovered to 117 before the reverse split. I mean, we still don't know if there's going to be one, but yeah, let's just say there is. Let's say it's 2 days after the vote, which would be like, what, the 11th? $1 without news. Yeah, it's possible. I mean, yeah, I think it could, actually. Buys going down here. BY back down just below 32 at VWAP. Buys fill in the gap, it looks like. Might be making RSI divergence there. Oh. But it's getting to the highs on that peak from back in February. 416.72 is the high. Bitty top. It was 415.72. One minute cup and handle. Doritos. There might be a split coming. They proposed a reverse split on BBY. So the record date for the shares was, when was that? Was that the 4th? I don't even remember when it was. And the shareholder meeting for when the votes have to be cast by is the 9th. So we started voting on it last week. They gave it the 9th for the deadline. I think it was the 9th, yeah. Hold above VWAP here at Bed Bath, so not bad. Just dance around that 32-cent level. But they put lots of outs for them if they don't want to do a split. So maybe they will. Maybe it's just have something in their back pocket. It would be good. $1 this week, BBY. It would be good. If we can hold over 50 by Friday, that would be legit. There's still a gamma ramp here from however long ago. Holy crap. 89,000 now? This was like 30-something thousand. Oh my goodness. So many people bought those yesterday. This was like 34,000 yesterday. Wow. See, as this comes up, that delta is going to keep getting higher, and the market makers are going to have to keep hedging. It's looking good. It's holding above 32 cents, holding above VWAP. I hope people are getting some more dated options, though. That's the thing. Oh wow, next week did pop up a bunch. 40,000 now. Oh, this camera ramp's already getting built. That's crazy. one green day with volume, and it's like that option chain is already getting loaded. 9th of next month is the vote, or when the vote is closed, basically. When you have to vote by. I can't believe this. That's crazy. It was like 30-something thousand when we looked yesterday. Open interest on the 50-cent strike for this week. I think I'd have to go back and check the video, but I'm pretty sure it was. I wasn't really paying attention to the volume after all the ripping. Yeah, this is basically how this week looked last week, and now that's next week, which is really good. The ramp gets built so fast when the options are so cheap. Like, whoop, people go crazy. Yeah, I mean they're constantly balancing it, the market makers. They're still so cheap. They're only 2 cents. As that delta increases, it's putting a lot of pressure. Unless if they're not delta neutral. Then we just have T+2 action to look forward to. Looking good. I gotta zoom out and see what's going on here. Yeah, double doji. Yeah, this thing looks like it's solid. It's holding good support, and pick up some more. I like it. Hold above VWAP. I'm chilling. Going on some more. Unfortunately, I don't have all the money I did when I sold still, so my position will not be as large as when I closed out at 80 cents. Well, my position might be as large, but it might not, probably won't be larger. So, oh, I guess I've got it in other stuff. Pretty big flush there on SPY. Filling the gap now. GME broke down through that support. Now down to that trend line. If it bounces on here, but it's really just following the SPY. BY red candle there down through VWAP. The volume, this you can just tell by the way it's moving, the volume is crazy. 74 million today already. In 30 minutes. It looks like it wants to fill that gap, but I don't know. Whoa, big flush on SPY. Still a good investment. It's risky trade. I don't know if I'd call it an investment. SPY filled that gap, now red. What is going on? Bank of America's CEO is saying stuff. Is that it? Russia's ambassador. Do we have something come out there? Let me see. Building permits this morning. Nothing came out at 10. 11:30 we have a 52-week bill auction. Then 1 o'clock Bowman speaks. Not sure. Pretty big sell-off there from open for SPY. I mean, there's still a risk. It's not as risky as if it was at $5, but I mean, can't tell you what to do. I can only tell you what I'm doing. So, and I can't make that decision for you because I don't know. I don't know your situation. It'd be nice if SMX just ripped. Could sell it. Put it into Bed Bath. Oh, GFAI gave it back. Ah, we suck again. Get rid of GFAI. BY below VWAP now. I had too big a position in that anyways. I think this chart still looks nice, but alright, BY is gonna go for this gap fill, I think now. Maybe. Well, that's still over 30. Oh, it's 32 cents we're testing. Yeah, that 30 cents should be hopefully that's a support. But the gap fills down to 28 cents. No four to lose. Yeah, that was a pretty good drop there on SPY. What are you down, Rob? X 3.25. Still have my position in here. I'll let BBY kind of chill out for a little bit, see where it settles. BII down 3%. Hold on to MCOM. This one could get squeezy soon. I bounce in there at the gap fill, 414. So Bed Bath's still over 30 cents. It's below 32 cents. Up 11.5%. $0.30 for sure. I think that could be a support. It's kind of the level I was talking about yesterday. Like, we flipped that 30 cents into support. That was kind of my higher end. Yesterday we weren't quite able to make that the support. Ended up being this kind of 27, which was this level, this bull flag level. So that's good, but now today it looks like we might be trying to make 30 support. Consolidating down here, kind of building a little bear flag. Thanks for your likes, guys. Got 23 of you with the thumbs up. Spot like he's gonna make some new lows. Bed Bath might be coming down also. RC down 3% is from assuming the other banks' earnings. Run out of gap up and gave it up. BBBY 2.5%, 31 cents. Microsoft's still developing its own AI chip. Most Fargo leaders are privately expressing increased concern that a years-long effort to unionize the bank's employees could soon start notching victories, and have made plans to spend millions addressing the pain points that can fuel organizing efforts. Lowest paid worker would accept for taking a new job rose to $75,000 a year in March. The lowest pay a worker would accept for taking a new job. Trying to conduct military exercises in sea area near Guangdong. Bank of America CEO says everything points to a mild recession and signs of inflation are tipping down. Alright, Bed Bath's coming down here. Kind of getting close to testing that 30 cents even. Gap fill's not till 28.50 though. The spread between the 3-month and 1-month Treasury yields has never been higher. Wow. Oh, Canada CPI came out this morning. 4.3%. Estimates were 4.3%. Goldman Sachs CEO says there is a higher risk of credit contraction. Worst of banking volatility is behind us. And Defense Ministry, China and Russia agree to continue close, high-level communication. Improve mechanism of interaction between two militaries. It's my top today. Retrace 408. Next 3 to 4 days. Lining up with SLD also. Yeah. Does look toppy from this morning. And right about that tippity top. Bear flag in here. Bearish MACD right under the 9. Guangdong. Bed Bath bouncing a little bit. Here you go, SMX. Climb. The 3-month Treasury bill yield has moved up to 5.21%. Highest level since January 2001. Wow. 5% in 3 months? Three-month Treasury bill? That's insane. Goldman Sachs earnings revenue 12.21 billion. Estimates were 12.6. So missed on revenue. EPS was 8.79, estimates were 8.08. So beat on EPS. Cook opens the first Apple store in India. Spruce Point issues short report on Nueve. I don't know how to say this. Nueve. Look at that. The buyers bought it up. Can't hold a good stock down. Oh, NVIDIA jumped on the Microsoft developing AI chip. Did they say they're using NVIDIA chips? Pure speculation. 30 companies have reported earnings. 90% so far beat on EPS. The highest post 1 week surprise statistic back to at least 2012. Bullard says not much clear progress on inflation means interest rates need to continue to rise. Yeah. Bed Bath support at 30 it looks like so far. PXMD. I like your other trade better than this one. SLGG. Regaining its gap up above VWAP now. Yeah, chip. Interesting. Yeah, I've never heard of it, huh? This is pretty bullish news. I'm not heard of this company, but name of it? Land Vault? Land Vault, the largest construction company in the metaverse. Riot's still going 9.5%. This move's been crazy. It's doubled since a month ago. These are, seems like Riot and Mara are usually the good plays if you're bullish or bearish on crypto. These kind of outpace. Given you could, I guess you get leverage just trading crypto, but trying to do options or stocks. These tend to get high beta to crypto. AMC move up, you say? Does have room move up, down 2.5. I keep seeing options alert for like high put options on AMC, and I think that might be a smart play with what's going on with it. Maybe a spread though, because the IV is still insane. Oh, it's actually not all that bad anymore. Options on AMC are heavily traded also. Look at that, that's crazy. MCOM up 10. Get this squeeze going. 200%. Get back to where bounce that split. Good average into this. I don't know. I'm gonna save capital for BBY. Super League. Close to testing the highs here. Yeah, almost 100 million. That's crazy, trader. Almost 100 million volume on Bed Bath already. Been less than an hour. Look at yesterday. We're gonna have to start probably ripping to the upside, breaking new highs to kind of continue to have increasing volume. Because yesterday we had more volume in the second hour than the first. But if we're just kind of consolidating, I don't see that happening today. COM 13.7. Kind of want to average on this, but yeah, 16%. Did I put that in the title? I can't remember. Put it in the tweet. Yeah, I put it in the tweet. Nice. So I'm $1.95. Kind of the first little resistance here. A couple gaps all the way, and then gap up to 580. Why did I say stop loss? 50%? 50% down? Percent down, 3 foot down. Pretty widespread. Or yeah. Yep, SPY bear flagged and broke to the low. 414.24. Broke through there. Let's see what's next on the support and resistance. 13.15. Pretty big flush there on the SPY. Quite large. Booty the day we would call. I know, and then once it's below that point, you're like, I'll just hold because maybe it'll come back up. Yeah, that's tough. That's why stop losses are nice, though. Just takes the emotion out of it. I think it's nicer for that than anything else, really. Just T after the divvy. The dividend a month ago. But it is looking nice. Kind of a bull flag of sorts. Fall in here at a higher level. Trying to go over that 50 moving average. We don't know when BBY's earnings are. Ah, Super League broke out. New high there on SLGG. Ripping 66%. 75 cents is kind of the next resistance on this one. Last earnings? I'm not even sure what they did compared to estimates. Have to look. Let me check. CUM 195 is a resistance, now it's back to VWAP. High still flushing down. High puts for SLD I think was the play. See. Oh, I can't check on there. November, they missed EPS by 30%, missed on revenue by 6%. So if you're saying good or bad based on expectations, then yeah, they missed on EPS and revenue. But this might not be the right quarter, actually. Oh yeah, that's right. LGG 68%, 73 cents there. COM just threw VWAP now. SMX negative, red. Tesla rally into earnings and then sell off. But it hasn't rallied into earnings, so maybe it won't sell off after. Got like 1 day. I don't know what the analysts are saying, but not very bullish on their earnings. Double BBY. It's nice it's holding this level, but yeah, we'll see. Holding it below resistance isn't best. Whether it be like on a support, then once it gets the resistance, it has momentum. OXD up 14%. SLGG almost 70 now. First C down 3.8. Little gap down here to 1240. Have earnings until 4/24. ALLR? Polarity? Oh, another reverse split. I didn't really have much action. Had this one spiky day. We looked at this one before. Yeah, pretty big volume, up 128%. COM. And I'm on VWAP now. SMX back green. Close out of my SI for now. Think they have earnings sometime? I don't know. Microsoft readies AI chip as machine learning costs surge. BlackRock strategists are ditching the 60-40 portfolio in favor of public and private investments, as well as tactical holdings of bonds. Bullard says Fed should avoid extensive forward guidance at next meeting. Keep options open. Still sees adequately restrictive policy rate at 5.5, 5.75% range. Buys to hold for longer until inflation contained. Not much clear progress on inflation means interest rates need to continue to rise. This is all Bullard talking. U.S. recession predictions ignore strength of labor market. Pandemic savings still to be used. That was all a free market. He was saying this. Almost 1.5 trillion of U.S. commercial real estate debt comes due for repayment before the end of 2025. Whoa. Sweden's government expects the economy to shrink more in 2023 than it previously expected. Bank of America research continues to expect a shallow recession. Only about 13% of U.S. job postings were remote as of March. So the building permits data came out this morning is down 8.8% to 1.413 million rate in March. U.S. March housing starts down 0.8% to 1.42. Consensus was down 0.34, negative 0.34. Wow. That really beat expectations. Housing market's strong still. That was 8:30 data. Buy bounce in here. 413.15 is what I have drawn. All news affected all 3%. Crawling along might be a few days to fill. Yeah, the chart looks good though. You're right. It's a nice one. But the trading up here was, you know, once you get that, whatever they got, the denial of the drug or whatever, who's to say that this wasn't priced in up here that was going to get approved? So the retrace back to that level is not a certainty. Morning trays. Trays, please. Actin fuel. COM above VWAP there. Chop masters.
Up days compared to the down days, so there's also some bulls that might be a little bit more confident or trying to pick up the stock in the near term compared to the bears. But this is not a bearish setup yet, but always just kind of keep that in mind. Bull flags can turn into a bearish setup fairly quickly.
Okay, well, and Citi thinks it can get to
weight loss drug was what failed
50 at this point, right? So Kevin Green, Renita Young, thank you both for breaking down the technicals and the fundamentals. Up next, Jenny Horn has the latest on Teladoc. The market is lower, but shares of TDoc are surging higher. Jenny will tell us why. Then it's market meetup time. We'll be right back after this quick break.
What a drug. Why is her mic so quiet compared to that music? Come on. Get it right, TD. SLGG back down to VWAP. BBBY moving up here a little bit, up to VWAP. That was me. Baby steps to big BBBY position. Baby steps to yacht. BBY broke VWAP there to the upside. It's at 31 cents, up 14%. Yeah, you like that one? Yes, sir. Yes, sir. Bring the scotch. All right. All right. All right. Morning, Kenny Man. 33 cents, show some resistance. Yeah, I mean, let's see. We rejected 32.80. Yeah, I guess that would be 33 cents. Kind of trading between 30 cents and 33. Really 30. Yeah. Market Masters a lot, BY. Patience. It's up 15% almost today, so, and that's after it was up, what, 20 something yesterday? So solid support being built. SLGG kind of coming back down a little bit. Some X, there you go, 6.5. Okay. Glad I held it. At least this minute. Next minute might be different. MCOM building a nice bull flag there above VWAP. BBBY up 15%. 32.34. Will you regret you didn't buy more? This is it, guys. Resistance below at the green candle. Oh. Team effort. That was you that on that video I saw on Discord. Thought it was Ace this whole time. VIX closed below 17 yesterday for the first time since January 4, 2022. Just like that, cue the sell-off. Tech layoffs in associated months. Come down. That's kind of bullish. The economy. Not a lot. JP Morgan says, even in an optimistic scenario of soft landing, which even the Fed deems unlikely based on the March board staff forecasts, equity upside is likely less than 5%, and that is the return that is delivered by short-term fixed income. BBBY breaking up above 32 cents. Now, maybe I should liquidate more stuff. I don't know. How many shares we picked up? We actually got a pretty good amount. That ain't bad. recoup my losses though, need a significant amount if it doesn't get past like $1. Yeah, Bed Bath's moving up here. It's up 17%. See if it breaks out. Aw. Yay! Hold till yacht price. No, I don't have a big enough position to hold till yacht price. This thing would have to be crazy. If when I bought in at $5 or whatever dollars, if I use that amount, saved it and bought it like now, maybe there might be a price. There'd be a yacht price that it could get to. The thing is that for me, the yacht comes after a lot of other stuff. So reading your voice. I know it's like I've got these other positions that I want to run, but I mean, I also have to balance that with like trying not to be married to a stock, and like I don't have to make money on BBY. That was a problem I did with GME for years. Is like I felt like I had to make money on that one for whatever reason. I think that's partially a symptom of being married to a stock. So don't be married to a stock. Divorce is expensive. But at the same time, if you're waiting for a play, you've been watching it and waiting for it to set up, and then it does, you know, be ready, be decisive. I married Spy. Shares? Yeah, I bought a lot today. Some yesterday, but I had to liquidate and settled funds and stuff to get more. See, on this account I have 14,500, and this account I have 10,000. And on the IRA, I have another like little double top here coming in though, 32.88. See if that's just a cup and handle. Hey Julian, don't be married. Divorce is expensive. Yeah, the IRA then I have 11,000. So whatever that adds up to. Yeah, I should probably chill. Oh, chill. Give it a couple days. Might get a rally, then a sell-off, and that sell-off we could get gap fill here at least 28 cents. You know, we might get a rally up to 50 cents or 60 cents, and then big sell-off, and would see a lower price basically than where we are now. So just gotta figure out how you want to trade it. Love hate. You an AMC? Yikes. Thankfully I never married that one. It does look like a little cup and handle. Yeah, I like actually. Whoa, I didn't even think about that. We are above that level, so this is super bullish. Should I liquidate and buy more? But no, yeah, this is good. This 32 cents from yesterday, and I mean even back here on this other engulfing candle day that I went long, went back long here, and then closed it out here for 10% loss. Of course, I'm buying back in higher, which I literally said that day. but I wanted the momentum to confirm the direction. So, and I was willing to do that. Actually, what I've gotten here is a lot more than what I had here, so that's good at least. If this continues, which it seems like this will, whereas this day didn't. After like a couple hours into the day, it was like a, yep. FOMO is real, 100%. That's what helps with scaling in. It keeps your, you can slow down your FOMO. Slow it down. Spread it out. Hide your money. In above 32 cents. Yeah. At some point. I'm not sure if we'll get another test down here at 30 cents today or not. It's looking good though. It is looking good. That move up to VWAP was with an increasing volume. And then the breakthrough VWAP, as you see, this volume keeps increasing. So, all good things. Circular motion, carousel, up and down, in a circle. All good things. Good things. Don't think this volume will be more than the first hour like we had yesterday. Unless we really start going crazy. You know, if we do, we'll probably be at 50 cents. Or 37 cents at least. And I'll say, why didn't I get more? What's the matter? Kind of rejecting this 33-cent break. That's a nice looking chart on MCOM though. 5 minute on the daily. So I'm still holding that one. Actually a pretty large amount on there.
I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Thanks for being with us on this Tuesday. A lot of news in the bank biz. We'll be following that for you as well as some other earnings. Here's a look at markets right now. The Dow Jones Industrial average down 1/3% at 33,859. The S&P pulling back 4 at 4147, but not too far off intraday from our all-time highs of 2023.
Wait for the reversal to
the Nasdaq
be more
gaining
confirmed,
fractionally at
but it is at a support there.
And the Russell 2000
that math coming down a little bit. Had a little double doji up here. We'll see.
Oil and gold today, we are seeing a balance.
32.45, still above VWAP. Maybe we'll cut the handle on the 5 minute. Good. That'd be more bullish than a double top. That's for sure.
Still relatively low this year, and gold 2020 a troy ounce, gaining $13. Oil at 80.88 the barrel. for a look at some of the top.
Good to hear you're learning, Julian.
Today's market joined by Jenny Horn.
That's where I held 27, 30 range, started out down. Nice.
The bank earnings are in focus. Names like Goldman Sachs and Bank of America.
Hold on.
Why don't you give us a picture of Goldman Sachs?
Yeah, Goldman Sachs not seeing exactly the most positive reaction today to its
holding
first
some
quarter
levels,
numbers,
showing some
not
support.
necessarily seeing a massive day of selling either. Shares are down about 1.5%.
Big night gas pop.
After the company did report lower profits, hit by a continuing slowdown we're seeing in some of their deal making, as well as some sizable losses related to the sale of their Marcus personal loan portfolio. So they did report their quarterly profit was $3.2 billion. This was down 18% from a year ago, whereas peers like JP Morgan, Citigroup, and Bank of America all actually reported higher profits on a year-over-year basis. This amounted to about $8.79 a share, which did actually exceed street forecasts, but revenue missed, coming in around $12.2 billion, also falling about 5% year-over-year. This miss, they said, reflects some challenges they faced.
I don't expect any news
from their foray really into consumer lending.
I guess
the bank did announce Tuesday the transfer of the rest of its Marcus loan portfolio from the held to maturity state for a sale.
Most of the news we've gotten has been
their first quarter was impacted by this slow deal-making environment, which has really plummeted since a banner 2021 for all investment banks. Investment bankers on average at Goldman took in about $1.6 billion in fees for the first quarter. This was a 26% drop from year-ago levels, and they said this does
I'm blown away by this the open interest though. From yesterday to today, this has gone up 50,000 or more, no, 60,000.
M&A transactions, this does impact a name like Goldman Sachs
notional value is not like a whole lot, but
and they did say they're exploring now the sale of Green Sky, which is their lending platform. So, well, it wasn't necessarily all negative here. There was little to be really excited about from a earnings perspective, and shares are lower on the year, still down about 3%, down about 15% from their high. Although I do want to say that when we talk these financials, it's important to separate the fact that this name is not plummeting the same way we're seeing in some of the regional banks.
That's just that one.
Right, understood. And what
you got this one, this one.
Better than expected quarterly results. We are seeing Bank of America
looks like it's
down about 1%.
Finding some support here.
We covered the banks at least briefly. How about turning our attention to another down and that is Johnson & Johnson.
So
that's just the $50 calls
favorable reaction
on
today,
weeklies.
And they have their own set of woes that have weighed on the company.
Since yesterday.
Really seen as a barometer for a lot of these healthcare names.
I'll have to go back to the video, but I'm pretty sure this was like 30-something thousand open interest
for the
on
quarter, which was lifted by demand.
50-cent calls for the weeklies, and now we're at
Tylenol to
almost 90.
pharmaceutical products to contact
There's
lenses.
21,000 in volume, so this number could go up another 21,000 theoretically.
$6.9 billion charge tied to their proposal to resolve tens of thousands of lawsuits alleging injuries related to their talc lawsuit. Now, the charge caused J&J to swing to a first quarter loss of $68 million, or about 3 cents a share. Compare that to the profit they reported of $193 a share a year ago. Now, costs related to J&J's COVID vaccine and their plan to separate their consumer health business also did weigh on their overall results. However, stripping out those charges, adjusted earnings came in around $2.68 per share, which actually topped the street's forecast, and sales rose to about $24.7 billion in the first quarter, also coming in above analyst estimates. They now expect revenue to rise about 6%, which is just about 1% higher than what they guided for back in January.
33% from low to high.
To range between $10.60
and at the day,
and
what,
$10.70 a share, which was up from their prior guidance. Although I do think this report really shows the
30% from the low still.
Of looking at earnings on an adjusted and non-adjusted basis, because I think these non-adjusted earnings today, Nicole, do paint a more negative picture and maybe more honest picture for Johnson & Johnson.
Got it. Okay, thank you for that. Jenny Horn, good to see you. Markets correspondent here on the TD Ameritrade Network.
It is reversing.
Get some insights in the news shaping the markets for that. We welcome in Rob Fleming, Senior Market Analyst with the Schwab Center for Financial Research. Thank you for being here, Rob. So we got a lot of the money center banks on Friday. We got a couple of more now. What do you think people are saying here? What's the takeaway so far from these bank earnings?
Yeah, I mean, the first sort of, good morning, Nicole. Thanks for having me on, first of all. But yeah, I think the first quarter results were mostly better than expected. It looks like net interest margin compared to where rates are now, or were in the first quarter compared to the prior year, still providing a benefit there. I did see a little bit of surprise in trading activity, especially the fixed income area. Bank of America had some pretty strong numbers there. We are still seeing some
SLGG.
choppiness in terms of the cash deposits, outflows
that's
being
pretty good.
offset at the bigger banks from some of the inflows that are
I'm
coming
holding
from those regional, smaller size banks that are having some more turmoil and cash outflows there. So investment banking has been continues to be a struggling portion of the banking industry. But overall, it looks like for the first quarter that the results were pretty solid, but it looks like we're getting a little bit cautious with guidance, and also we're seeing a little bit of some reserve building, some loan loss provisions. Not as, not
interesting, right, Mara, how much they've
companies
outpaced coin
start to build up those reserves in anticipation of maybe some choppy waters ahead.
You know, you and I haven't spoken since we finished last week. You know, we had CPI, PPI, retail sales. Yesterday we got in Empire Manufacturing. And, you know, what are you thinking about all these pieces of economic news that we've been getting?
Yeah, definitely seeing some moderation in inflation there, especially on the headline rate. So that's a good sign. Still really elevated, way above where the Fed wants to be, and then the core rates stripping out some of the volatile food and energy prices still remain well above where the Fed would like to see. So good signs that we're heading in the right direction, but I don't think it's enough to sway the Fed. It looks like the probabilities for the May meeting or decision is still a 25 basis point to rate hike is the highest probability according to the CME Fed Watch tool. And then we'll see in June. It looks like a pause is being priced in right now, higher probability. And then the second half, there's that disconnect between where the Fed says they're going to be and what the markets are pricing in. The markets are starting to price in potentially some rate cuts in the second half of the year. So that's going to be
this does look like a cup and handle now.
Dynamic as they
There's the cup, little handle being built,
and battle it out in terms of who's right. And
this breaks, we'll probably see a new high on the day
with their monetary policy.
Over 33.50, over 33.75.
And permits and everything. Where do we stand in the housing market? What are you thinking?
Let's do it.
Yeah, still supply is a big constraint right now.
The ego on you.
We did see yesterday.
The ego on you.
Settlement did improve, but it's still below that.
Chili Chills, congratulations. You've been sniped by Ace Ventura. Thank you, Ace, Papa Ace. Otherwise known as BBBY Fire Marshal Bill.
We saw housing construction activity.
Leaving fires out there.
Expectations, but
thoroughly put them out in water.
Expectations. So that's
thanks, Ace. Appreciate it, man. Chili Chills, Access Bypass, Grumpkin, Trays, Indie, Hitman. Congratulations, you guys. You come thank Papa Ace. The gifted memberships.
See that come in and boost
the ego on you.
I'll just share your gift, man.
Price is elevated, and that can you add in.
This is Ace sniping those grays. Blah, blah, blah.
Down a little bit,
blah, blah, blah. Look at where he is, dude. What the heck? Just like an old lady right next to him.
The affordability issue there.
Look at this guy flexing.
We're not too far off from intraday highs of this year.
Thank you, Ace. Appreciate it, man.
I mean, despite all the questions and concerns and recession talk and Fed hikes, not too bad,
well
right?
Done.
I mean, when you think about year to date, the S&P is actually up about 8%. This would
well
clock
done,
in
you guys.
a great year. You know the phrase well. My
got him.
Art Cashin had a
5 bouncing there. BBY also bouncing.
This phrase today, and that is
and breaking out potentially.
You know what happens over the next couple of weeks ahead.
Yeah, you see that? You see that wick right there? Holy crap! 34 cents just wicked the time and sales on that. Let me see that. What happened? 15,000? Was it that one?
Go away, because if they did that right now, they'd be just okay, wouldn't they?
Yeah, I mean, we're definitely going to be tested here with the markets.
Where's the 34?
Past the bank earnings. Unofficial kickoff of first quarter earnings season.
Someone
now
just
we're going to
hit
get
a huge
swath of
hit on the ask, I bet.
Profit reports that
are
going to tell the tale of not only how the first quarter went, but I think the guidance in terms of looking forward, looking ahead is going to be very important, and that's going to be plenty for the market to chew on as we do wait for the Fed and see what they come up with on I think it's May 3rd. Their decision comes, and then looking at what they say in terms of moving forward in the second half of the year, what their expectations are. So I expect we'll still see some choppiness as we digest all these earnings reports and outlooks. And then also the Fed decision is going to be a major portion.
There it is. That's that green one.
Just a quick thought.
How did they get filled so high above the
street's expectations? And names like
there's only a 500 share.
Baidu are jumping a little bit. Any thoughts on that kind of piece of information?
I think it filled so high above the ask.
Yeah, I mean, it's the world's second largest economy, so that's
crazy.
Definitely when we see stronger than expected growth. That's always good for the
Here
global
we go.
economy. I believe it's still running a little bit below historic or where they're projected to get to. But it just shows that they're reopening. They were a little slow to kind of open up the economy there, so it's kind of an indication.
34 cents is the high of the day on BBY. We just hit it.
And
500 share order
as they do reopen.
Somehow got hit up there.
Or subsequent quarters here,
but started this breakout potential. 33.50. 33.25 right now.
Great to see you on Tuesdays. Every Tuesday, folks. Don't miss Rob. He gives us great perspective.
34.44 is the high this other day. Last time we had engulfing candle.
Plenty more to come here on Trading 360. Our 360 Spotlight. We'll take a look at the airlines ahead of this afternoon's news from United Airlines. All right, is travel demand back? Today's disruptor, Datadog. Piper Sandler.
Gas moving up here.
Stock with a neutral rating. George Sillis has all the details and a way to trade it. Our 360 round will dive more into those earnings from Johnson & Johnson. And up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals.
Lichtenstein.
And Penny Polcari is with us. Slatestone Wealth. He's ready to have a lot of fun and take a look at some of these names, including C3AI, Bank of America, and Newmont coming up.
Okay. Buy's coming down here. BY not broken out yet, but it looks like it definitely wants to. A spike on ISDR. Some X is plenty sketchy for me. Oh, it's not breaking out yet. Fighting it. 350 million today. More than yesterday. Yeah, we get 350 million. We've got to be breaking 37 cents. I'd say probably 40 cents if we get that much volume. Got some calls today for May. Yay! Any catalysts? Like today? Right now going on? No. GME is very annoying, yes. Blasphemy! Careful with the calls, guys. IV is insanely high on BBY, so you can make money on them, but I mean, they're outrageous. 500% now, because you also have earnings that's adding in there. 400%. Just know that if it spikes up a bit, like, be happy with your profits. We haven't really seen Ivy crush on BBY yet. It's very, 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 very weird. I've never seen that before. But there still probably will be some with whenever earnings are. We don't know yet. We don't know. They haven't announced their earnings date, which is also odd, I think, isn't it? Because whoops. Last year was on the 12th, so I don't know how much time they have to give from when they announce till they release it. There might be like a week, or maybe it's just a day. I don't know. I don't know how much time. I've not tracked it that close, but I know with GME, the closest we saw was when Ryan Cohen announced earnings, and it was in like 4 days, I think, 4 trading days, maybe 5. And that was earlier than expected. Bed Bath, though, I know there's a time frame on when they have to announce by, as far as from when their fiscal quarter ended. So they have to do it before then. As far as when they announce the earnings are and when they actually have them, that they might be able to do that in like a day, which another curveball. I don't know, some big master plan. When will I sell these shares? I don't know. Suppose after we hit a top that I think is a top and start coming back down. I'd like to see gap fills. Reverse split, I'll probably close them. If nothing else, I'll close them when they announce a reverse split, if that happens. Share offering, I'd probably also close them right then also. But TAYs, I'll probably just hold them as long as momentum's there and wait for the momentum to shift. Everything about it is weird, yeah. Tip pink ramsey punch, give no guidance, keep fetching in the dark. They have decent earnings and decide to report next week. Pissed these bloated options? I don't know what you mean. You can sell before they report. What tangled webs we weave. Buy coming down here a little bit. That's probably just estimates for their earnings. Probably estimated. So they have to have a filing, I think, right? For when they're gonna, there would be some kind of filing announcing when their earnings are gonna be. Check. Proxy soliciting materials. Release those on the 11th, 12th, and 14th. Yeah, there hasn't been anything as far as their earnings. Shareholder meeting is the last thing they really reported, I think. B? Party company? Eventbrite. Party. Party. Looks like it might want to come back down to VWAP here on Bed Bath, actually. 5-minute, we have that little RSI divergence. which I don't like to hold those with too much weight, but break end up being that wick from that one order. Coming down here, 47 down to sell wall at 34. I can't scroll on this. Need to scroll. Mobileye Global. This was an IPO. Wow, good performing IPO. October. Imagine that. Where are their earnings? Haven't reported since January.
And when we look at the longer term trend, you're going to see why I just sort of gave the benefit of the doubt to the bears in this instance. I'm looking at a double top over here on the left side of your screen, and then you can see the conviction that came into play, the sideways consolidation. And as of right now, we're currently just balancing around this 29 level. You got a pretty well-defined upper extreme, 31, 32, and that lower extreme around 26. Let's shift our attention here to the longer term time frame, because here you can see another, again, trend environment to the downside, top left, bottom right, and you can also see another double top up on the top left corner there, and you can see some migration of value to the downside. It's been playing out much like we looked at in terms of the more intraday hourly chart. In this instance, we formed value around 47, 42, 34, and 29, almost every $5 to the downside here. You can see some weakness coming into play, a well-defined trend lower, and then just taking a look at where things stand, because Kenny was pointing to that 50-day moving average. Here it is, this blue line, testing it, still holding below the 200. That's the yellow line, longer dated. Look at this, shares are down almost 10% year to date, and we're looking at the RSI, which is kind of in the middle of the range, not really providing a lean one way or the other. So I'm just kind of reverting back to that longer term trend to the downside, and then focusing on that short term intermediate trend lower on the hourly as well.
All right, thank you for that. Yeah, and you know, we're continuing to get a lot of the bank news. It's not over, right, guys? I mean, we have a big week ahead this week. Any final thoughts, Kenny?
Yeah, so what I'll point this out, right? That Bank of America, like Ben just said, it is down about 10% year to date. But in contrast, look at Citibank. That's up 9% year to date. JP Morgan's up 4.5% year to date. Morgan Stanley's up 5%. So I think this one was overdone. That's why, you know, I think it's an opportunity. But listen, I also like the name. It's in my holder. It's in my portfolio. I like it. I continue to buy it. So I might be a little bit biased, but I think there's opportunity there.
All right, okay. Last but not least, you're taking a look at Newmont today. Kenny, why is this one on your radar?
So Newmont, we did this, I think one of the two times ago when I was on with you, it was kind of maybe mid-March. I was talking about how I liked gold. I liked the way Newmont was setting up. And in fact, it has moved higher since then. We've traded up, we've pulled back. Now we went through the trend lines. As I thought maybe we would. We traded above, and now we've come back down. We're sitting right back on the trend line. I like gold. I like what's happening. If the Fed pauses after the May hike, which is what I think they're going to do, then the dollar will calm down and commodities will have an opportunity to once again move higher. Remember, during all this last week when they said, oh, the Fed was going to pause after the PPI, they took gold up to almost 2060. And Newmont kind of was building that base there. Now, if it happens again, I think Newmont sets itself up again for a push higher, at least up until maybe the mid 50s, where you see the top back in January.
Okay, and you've talked about this one before. Tell us your thoughts, Ben, about this.
I think last time we talked about this, Kenny was right. I was wrong. Kenny was somewhat bullish. I was bearish.
You don't have to say that.
No, that's fine because I feel the same way about it right now. And this actually is the chart I wanted to start off with. Kenny, I'm glad you reminded us of the last time we looked at this. I was pointing out how we had been trending to the upside, but I also pointed out, look, we were breaking down, taking out key areas on the way down. So I thought we could possibly fall in line with that longer-term trend. But I'm looking at this chart. It's a mess, right? So let's just move on. At this point, we don't really have a well-defined trend. We rallied up. We broke down. Kenny mentioned the kind of intraday swings we've seen. Let's get away from this. When in doubt, zoom out. And here you can see on the daily, this is what I was reverting to, that longer term trend to the downside. So yeah, we're holding above this pivot area of 44, but if we get back down below it, it opens up a door for a retest to 37. The intraday doesn't really provide much of a lean, but this does. Again, this is a longer term daily trend to the downside with no rejection of this balance that we're forming. Again, a couple tops here, holding above 44, but let's see if the bears can get back down below it, could open up a door for continuation of the weakness we've seen.
Yeah, and look, we've been watching these commodities closely, most of which have been on the upside in a big way. I mean, when you look at gold right now at 2023 a troy ounce. Kenny, just a quick thought here. Thank you, Ben, for that chart. Kenny, quick thought. So what's your bet on the Fed right now? Are you thinking 25 and done?
Yep, I think they're going 25 in May. That gets the terminal rate to 5.25, which is where Jay Powell had identified long ago that's where they wanted it to be. Then I think they pause. I don't think there's any pivot coming this year. I think the idea that people are going, yeah, we can raise in May and then start cutting in August is absolutely mind-boggling to me. I just don't see it at all. I think the Fed pauses and then holds it there. I think if there's a rate cut, it comes in 2024. I don't see it coming at all, but I think the market is prepared for exactly the scene that I'm saying, that we're going to hike and then pause, and then the market will find some stability. Now, if inflation rears its ugly head again over the summer, that's going to be a different story, and the Fed's going to be, the back's going to be against the wall. They're going to have to force the hike again, and then it won't be pretty. But I'm betting that that's not going to happen. That inflation may stay sticky, but it's not going to go up. It's going to be tougher getting it to come down.
All right, one and done, and no cuts to follow. Got it. Kenny Polcari, thank you. Sleetstone Wealth and our own Ben Lichtenstein, always fantastic on those big three charts. Thank you both for being here. Coming up next, we're going to spotlight the airlines. United Airlines reports earnings after the bell. Can't wait to see what that company has to tell us. We have all the details. We have an expert
SPY bouncing here a little bit
about the airlines and the travel demand. Next on Trading
Bed Bath also. MCOM holding up nice. 13%. SMX rallying up 10%. Good strong consolidation up here on Bed Bath. SPY probably making it back to VWAP. Little red candle down to VWAP there on Bed Bath. Wait, we'll see. See polls about VWAP. VWAP is now like 32 cents. It's 31.99. So far looks like it's holding. Sold my net gas contracts. Maybe jump back in at a support. Techno up this jazz song. Nice. Look at GME double bottoming right on our support there. That prior resistance that we broke above, and now it's acted perfectly as support. Alright, we got some downside volatility on Bed Bath now. Maybe we're in for a gap fill. Got red under the 9 moving average, bearish MACD, breaking through VWAP. I think so. We're dip buy potential coming up.
It the other way around?
Well, it's an odd combination, right? The airline industry had, and the aircraft manufacturing industry had moved from 4-engine and 3-engine aircraft down to 2-engine aircraft, whether that be for single aisle planes or for twin aisle planes. So as COVID hit, they retired a lot of their largest capacity and some of their older planes in expectation that they would get new deliveries from Boeing and Airbus of mostly single aisle, but also some twin aisle aircraft. And so the aircraft business is moving from the 747 and the A380, those 500, 600 passenger jets, to the A350 and the 787 on the large side, which hold, your 200 to 300 passengers. So it's been, rather than going hub to spoke where everybody flies to JFK and then JFK to Europe, you can fly domestically from any domestic airport almost to a destination in Europe. So a lot has changed in the airline industry over the last decade, and new planes are very important to that change.
Okay, thank you for explaining that, because really during COVID, I started to wonder, did you need bigger planes because no one wanted to sit next to each other, or did you need smaller planes because there were so few people traveling and it cost so much to travel? So thank you for clarifying that. You understand my question. So let's talk about the different names. We're waiting on United Airlines after the bell today. So let's start with United versus some of the other big guys like Delta and American. Which ones are your favorite and why? And do you think we'll hear some good news? Do you think United could beat the street today?
Well, we tend to always lean towards the simplest business models.
BBY moved down a little bit.
Major integrated
3164.
The Deltas, the Uniteds, and the Americans. They have very complex route structures, very significant numbers of different aircraft where they need different pilots trained on different aircraft. And those businesses, when demand is reduced, have a very difficult time, both from a labor and from an aircraft standpoint. Where if you look at the JetBlues and the Southwests and some of the discount airlines, they fly one airplane, one pilot rating, one type of baggage handle cart. All of the business parts of it align very easily to increase.
Looks like it's going to come down and then just gets buying pressure.
Change. So we've always favored the flexibility in the domestic regional players. Only right now, it seems like travel demand is increasing in Asia, where it's expected that if we run into recession, you could see some pressure domestically. So right now, we're really in a wait and see to see how the economy goes before we are particularly bullish on any area of the airline business.
Yeah. And so, and I understand what you're saying for the simplicity versus all these different routes and different pilots that are needed for those. So which names do you like the best? Do you have buy ratings on certain names?
Well, we don't place buy ratings on stocks, right? We are an asset manager. Okay. So we own them all to some degree because we have a very large breadth of product and client. But I would not say that right now that we are, seeking to actively invest in a lot of them, only because we're at that great inflection point in what's going on in the industry as a whole and in the economy as a whole. Certainly, United will give us some information as to whether or not we're seeing higher load factors, which will be good for the entire group. Load factors is really the data that you want to know is, are they booking flights now in the summer and in the fall and keeping their planes full? Because these are businesses that really need to run at full capacity.
Anybody who's gone on a plane lately, they're all jam-packed, they're really expensive. So I think that they're probably meeting their goals as far as filling those planes, and a lot of them. Can we talk about Southwest? I mean, over the holidays, Southwest was plagued with all those cancellations. It was it itself admitted that they were working to upgrade computer systems. Today, they had a ground stop. The FAA said that all planes were halted. They've since resumed those flights. But, if you love Southwest, I mean, you're getting pretty tired of these headlines, right? What happened today?
Right.
What do we need to know?
Nicole, it's a tough enough business to try to stay away from the self-inflicted wounds of computer problems. Aircraft scheduling is a very, very complex business, and having the right plane in the right place and the right crew to man that plane is very, very difficult. So and computers are extraordinarily important in that. And clearly, Southwest perhaps did not invest along with their compatriots in software over time.
Exactly.
The other thing to recognize about Southwest is they've always had a go-it-alone kind of strategy where they don't participate in the major booking agents. They don't participate
30
in the
cents has been a support
that everybody else does. So they're really on their own and on an island when they begin to run into problems. It takes a lifetime to build a great reputation. It takes a very, very short period of time to lose that reputation. And I think they are at risk of that.
Yeah, well, today's nationwide technical issue left everybody pretty frustrated, but
volume 157 million already.
Flights, so I guess that's a good piece of news. Tim Lesko, wonderful to see you. Mariner Wealth Advisors, thanks for being on the show today, Tim. Safe travels wherever everybody goes. Thank you. Okay, up next, the Disruptors, and George Sillis is with us. We'll take a look at Datadog after Piper Sandler initiates coverage of that stock with a neutral rating. He'll break down that report and a way to trade it as well.
Really just consolidation day here on Bed Bath so far. Gapped up, but just trading this range. Yeah, all Southwest flights been grounded across the U.S. Yikes. JP Morgan, which is facing a lawsuit by a victim of Jeffrey Epstein, trying to learn the identity of another Jane Doe making similar claims against Deutsche Bank. Mike Wilson's Morgan Stanley chief equity strategist has a bear case for S&P 500 at 3,600, a bull case at 4,200. Bostic expects one more rate rise. Yeah, Bostic's talking. Economy still has lots of momentum. Inflation's too high. My baseline is to hold on rates after next hike. Expects when rates hikes end, Fed will hold for quite a while. It'll take a while for inflation to move back to target. That's all Bostic. I don't have a recession as my baseline outlook. SEC needs more resources to police crypto, Gensler says. Goldman Sachs raises European Central Bank terminal rate to 3.75 versus 3.5 previously. Forecast for hike in May remains at 25 basis points. That gas ripping up. Looking to get back into the longs. It was at a resistance, so I'm kind of scalp day trading futures. I typically just close at resistance, open at support if I'm going long, and vice versa if I'm going short. I actually opened up a short and closed it out for a small loss, but now it looks like it is going to be breaking out. So looking to re-enter the long. So it's kind of that resistance back here on UNG. So it looks good till...
Daddy, you don't have eggs.
Oh, wait, buddy.
This time you don't have eggs. You don't have eggs.
753. But really, I moved back up to this $8 on UNG is the next major level. I think it's $3 on the futures. Go get some eggs. Morning, Kai. Is this the Kai? 3 B's, 1 Y? Good short on Oprah. Opera. 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 Oh, look at that chart. What's this? Beautiful. Norway-based tech company. AI, what do you know? That's the most sustained, like, good-looking chart we've seen on AI, not just crazy, spastic, volatile, straight up. Kinetica? Kinetic? Meta? Oh yeah, this one. Yeah, this was a good mention the other day. Dree, you got some good tickers in there, man. I liked what we mentioned the other day, and I still like it. This is the reverse. What is this? Indeed, dividend. Weird. $3K no sell. Yeah, Bed Bath finding support still on 30 cents. SMX, it's going again, 16.5. Whoa.
Relatively easily absorb this, especially with the very healthy balance sheet that it has. So when we think about the three components of J&J, you've got the drug division, which is probably decelerating in its growth a little bit because of some patent losses. And then you've got that offset by a little bit of stronger growth coming from the device division, which has some pent-up demand because of COVID. You know, that kept a lot of people on the sidelines from getting major surgical procedures. They're coming back into the fold. That's helping J&J. And then the last piece is the consumer division. And that's a division that has some nice top line recent growth. A lot of that's being supported by price increases, but that is being largely offset by increased cost assumptions. A lot of inflationary pressures hurt the consumer division disproportionately hard. So you're seeing a little bit more flattish on the bottom line for that consumer group. So all in all, it positions J&J for some, I'd say steady growth, but probably not as fast of growing entity that it was, call it 3-4 years ago.
Right. So it sounds like good, not great, because when you talk about the three areas, two of the three, I put some down arrows after you were speaking, Damien, right? You talked about drugs, losing some patents, down arrow. Consumer products, everybody loves consumer products, but inflation hitting them. The bright spot seemed to be the devices. Lee, you combed through all of these and the competitors as well. What was your takeaway?
I agree because, you know, they gave guidance maybe 5 to 6% growth in a lot of their they guide for the whole year, so that's not double-digit growth for sure, but I believe it is steady. The interesting thing
snap, HKD, Ryan called it.
People wanted to see if the Biomed acquisition
weird how it's been trading lately. Look at this.
The medical products division, and it did seem to, because they earned what was it here? They earned a lot more than $7.5 billion in that segment versus it was up 7.3% from the first quarter. So that seemed to play out okay. As far as the patents, that's true. Stelara is going off. However, they have had pretty good success with a couple of drugs like Darlex,
an early indicator
for multiple myeloma, and also
I wonder if HKD doesn't run anymore because it has too many eyes on it now.
Did a head-to-head data comparison versus one of Novartis's drugs, and Tremia.
I'll look away.
outperformed. So there's those that could maybe take up some
Wind's
of the
going
slack
up.
from the Stellara losing its patent protection.
Wow.
Right.
Yep, wind is
Okay,
going
so
again.
like
32%.
down year to date, but
This was just halted the downside, I thought,
Pharma,
right?
Johnson Johnson, Bristol, Roche, AbbVie. Those are all slightly lower this year, Damien. Do you have names? You said that the valuation here on
Be like illiquid, sketchy
is
stocks.
looking pretty fair right now based on
Big
what
percentages.
You're saying, slower growth. Is there one that's a standout to you?
Yeah, it was
Is
halted.
there one that seems like more of a
Nope,
buy?
still trading.
Yeah, I think there's a few. A lot of the European pharma names look undervalued to us.
SMX,
so
another one, 20% almost there.
Potential upside on valuation. A company like GSK, for example,
See if we can break that level
is trading
today.
at a pretty low valuation relative to the growth potential. And I think that what's
34.70
really
was a
causing
fluke.
the challenge here is the market has gotten so
Won't
used
pass
to
that.
GSK being sort of a slow-growing company that now that GSK is moving into a faster growth period, I don't think the market's fully realized that. On top of that, GSK has some litigation pressures, and the market tends to overreact to those,
Trying to get a
and they tend
Tesla
not to be
pre-earnings run
as
up.
big of a deal as the market initially thinks. So
I don't think it's
GSK,
going to
better
happen
growth
tomorrow.
opportunity, probably an overreaction on litigation for that
Well, you
side.
better hope for good earnings if you're holding.
One of the names we think is probably best positioned for upside on valuation. Also, another name we like a lot.
Nice consolidation today, honestly.
One
this
more
is
name.
This is good.
Very
good.
Okay, very good.
You know what I'm going to do? I'm going to take
We're using 30 cents as support, which is exactly what I want to see. Yesterday was 27. Today is 30.
Damien Conover.
Tomorrow will be 34.
Very, very much. And thank you, friends, for being with me here on Trading 360. I'm Nicole Petalides. I'll see you at 2 p.m. Eastern Time for the watch list. Fast Market is next.
GMDA. Gonna make 167. Does this have AI? Biotech. I was gonna say it looks like that other biotech one. So the bounce play on these biotechs has been pretty good. They sell off on the bad news. This thing's bouncing higher than it was before. The only one I have left is IONS. Hoping GTI wakes up. You're gonna make me buy more BBY. I just had a flash of that meme. Is that what you're going for? A good cross on moving averages. Yeah, we've had a bullish MACD for a few days now. RSI ticking up. I mean, increasing volume. Everything looks like a bottom here. So our supports continue to get higher lows, which then sets up some inverted head and shoulders, which we have here on the hourly. Yeah. Already way deeper than I wanted. Yeah. Yep. Yep. Lots of pumping ups. Well, we've got all the PDUFA dates, so you're gonna see those biotechs get super volatile the next couple weeks. But outside of that, yeah, I agree. There have been some hype runners last really couple weeks.
Hours into the trading day, stocks have reversed lower from earlier gains as traders digested a slew of earnings reports. Despite today's slide in shares, the earnings season has so far proved resilient, with the major averages
slurred? What is
since
causing
the
it?
period kicked
Oh,
off.
PDUFA?
Now let's take a look at the 4 major indices,
Sorry,
which are
cleaning my
just
teeth.
off of session lows.
The biotechs.
The S&P 500 down a point.
We don't know when BY earnings are. They haven't
day.
announced.
Dow Jones Industrial Average off about 85
Yeah,
points,
I mean,
or a quarter of
it's
a
just
percent.
speculated.
The tech-heavy NASDAQ 100 down about 0.1%, and the Russell 2000
But I think they
small
can.
caps leading to
I don't
the
know of any
downside,
dates where they,
off about
or any kind of
0.6%
constraints where they
on
have
the
to have
session.
earnings
To help me
within.
break down this market action, let's bring in my
As far as
co-host,
when they
Kevin
announce,
Haynes.
I think they could have earnings almost
you
maybe
know,
even the next day.
Are you ready for the transition?
Yeah,
Not sure. I've not seen that before,
this
but
morning,
I know with GME, Ryan Cohen announced, and
since the start of
it was like
2023,
4 or 5
the
trading
indices
days,
have done pretty well.
and that was further
VIX
than expected,
falling,
which doesn't matter, but
equities rallying, and
that was
then all
maybe
of
the
a sudden,
soonest I've seen.
Boom,
SPY moving
turns
up,
around, and
SMX
there was
moving
no
up.
real news because the earnings this morning
That
were
gas moving
relatively
up.
positive.
Yeah, but sentiment matters.
Yeah,
And
sentiment does, yeah.
And what do I mean? Well, you're moving from a financials, which began earnings season, where the bar was incredibly low,
very
and they
low.
were all beat up,
Yeah.
to now you're going to get to high cap tech.
Sounded like you said, a la Fidat.
Yes.
No,
And that's why you're probably seeing some hesitation.
That's why I'm
here.
playing these
Because
biotech stocks.
Look at some of the runs
I closed out some today
these
because I
stocks have
wanted
had.
BBBY
I mean,
money.
Meta,
Speaking of, BY is
Nvidia,
moving up.
You're getting all these names.
Breaking up
Tesla,
above VWAP.
and all these names, even Netflix.
Apple, yeah.
So
They
Ions is
all
one.
have
Their
incredible
PDUFA date
percentage rallies, and now you're getting into that. You know, you start with financials.
25 of this month,
good,
so
and
next Tuesday.
There's a big relief rally going on.
So you're getting some of them that are
but
kind of having
you're now through that.
run-ups into it.
Morning will be the last one, and then
People are
we're
buying
on
in
high-cap
the
tech,
speculation,
and that's
just like a
whole
earnings run-up.
different story coming out.
Yeah, Netflix on today after the close, Tesla tomorrow. A couple key reports, but you did mention big tech. Leading the way today, and one of those names has been NVIDIA. It did get another upgrade today. Let's bring in Caroline Woods, senior markets correspondent here on the network, to help us break down
There you
this
go,
story.
SMX,
now,
almost
Caroline,
20%.
the stock was up pretty significantly. Then Microsoft, the information came out with an article about Microsoft perhaps joining the AI chip revolution here.
Yes, I saw that report, Tom. Shares still
I would like more of this, but it's so illiquid.
Today, though, for NVIDIA,
Just
and you
sketchy
were
to
talking
get
about
in and out of.
incredible rallies, and this is one that's seen an absolutely incredible rally so far in 2023. It's up about 90% so far this year, enough to make one analyst at HSBC finally bullish. Got a double upgrade.
It's all GG
Buying from
coming down,
reduced
but
from
pulling up those
HSBC
gains,
with a price
really.
target of $355, up from $175.
Heck,
No
yeah, still moving
surprise,
up
this
a little
analyst
bit.
is pointing to AI as his biggest reason
Expense is
for
tough,
optimism.
yes.
Says, well, you know, it should be pointed out that
This one you have to
some
scale
might
just
say
'cause
he's
liquidity.
late to the game,
Yeah.
given how far NVIDIA has already run. But he does admit to being too cautious on NVIDIA, but now believes that its AI opportunity more than offsets previous concerns over a data center slowdown and rising inventory levels. HSBC is shocked by NVIDIA's pricing power on AI chips and sees it driving earnings upside and a higher
Need
valuation.
NVIDIA
and
to
believes
come
the
down.
incredible AI pricing power is
I'm hoping
not
that's a little
fully
blow off the
priced
top.
into the shares.
Another
Now, speaking of that pricing power,
RSI
Power
divergence.
notes that AI chips are between 10 and 20 times more
I think it probably
expensive than
will
the
be.
average price of a typical graphics processing unit, GPU, for gaming. And says because these AI chips are so much more expensive, the company does not need to see as much of a volume increase to meet revenue growth expectations.
Are their margins
so
the same?
all of the reasons for optimism really pointing around that AI opportunity. Now, NVIDIA, of course, dominates the market for AI chips. But as you said, Microsoft may become a competitor. The information is reporting that Microsoft is working on its own AI chip. Actually, it's been working on it since early 2019. It's codenamed Athena. Right now, according to the information, there's a small group of Microsoft and OpenAI employees who are currently using it, testing it, and Microsoft is hoping that the chip will perform better than those of some of its vendors like NVIDIA, So it kind of can save time, can save money, and can kind of increase efficiencies. So I think that, you know, it could be weighing a little bit on NVIDIA shares, but I mean, we still are seeing gains of almost 3%, whereas Microsoft is off about 0.4% right now.
You know, Caroline, here's something I don't say a lot on this show. This upgrade is ridiculous. I mean, how, other than involved in this note, should say, don't worry, I've been in a coma for the last 6 months, so that's how I missed this move from $108 to $270. Now I'm upgrading. This is why the analyst community gets beat up and doesn't get a lot of respect, because they do things like this.
MCOM,
and
BBBY, give me some back.
I mean, this is...
And also forming a nice bottom.
Analysts chase. They chase it down. I want to know what price he reduced it to a reduce. And had a price target of 175. That's $100 from where it is now. It's a big miss here. Tom mentioned late. Yeah, that's an understatement. Late.
Yeah, well, that's why I said late to the game. Yeah. I was trying to be a little bit nicer about
sorry.
it. I will say though. So he boosted the price target from 175 though to 355. So the median now is 298.50. So that's less than 10% upside from current levels. It's currently trading around 277. So I think we can at least take that this analyst maybe was late to the game, but sees quite a bit more upside than other analysts on the street, possibly giving him some credit. But he did say, you know, they were too cautious
to sell some 50-cent calls
on NVIDIA, not necessarily realizing the pricing power of these
just
AI chips.
Premium.
He's catching up, but you're right. It's why so many people, including you, including Oliver, I hear him say it, you know, don't necessarily trust the analysts' calls anymore, or price targets.
Yeah, and you know what? To kind of go against that, it's kind of refreshing to see him saying, I was wrong on this. And then remember, 6 months ago, we weren't on this program talking about AI. This is like a new phenomenon. So remember, this stock got below $110 a share just about 6 or 8 months ago. So, you know, he wasn't too far off. I don't think anybody was ready for the explosion in demand that we've seen for AI and the infiltration that we're going to see across every industry, probably globally. So, you know,
Tom,
maybe.
I don't want to fight with you on your birthday, but if you've been around for the past 3-4 months, it's all we talk about.
Yes.
It's no longer metaverse.
He didn't see it. He missed all that.
Yeah, I was going to say.
6 months. Yeah, 6 months ago we weren't talking about it as much. Now it's become daily.
So maybe he was on, you know, maybe he was on sabbatical.
Yeah, maybe. All right, thanks to Caroline Wood, Senior Markets Correspondent here, breaking down the story on NVIDIA. But now let's bring in Randy Frederick, Managing Director of Trading and Derivatives at the Schwab Center for Financial Research. Randy, you know, Kevin and I were discussing the turnaround here, and I just kind of wanted to get your take here as people kind of press in maybe they're a little bit lackluster on getting back into the equity market, so we've kind of ground higher, kind of pushing back against the fact that it seems like a lot of people have lowered their expectations for the equity market.
Yeah, GME double bottomed right on our support line there
that we've
today.
Seen to the
Triple
upside
actually,
here
1, 2, 3.
Because you know the shorts are in.
Almost even doing a fourth one right around it.
It doesn't matter when earnings are starting to beat expectations, right?
But it really is just moving with SPY.
I'm frankly surprised by the
SPY come down during
SLD markets. I mean, we
could happen. Same with GME.
7% at the end of the first quarter, and now we're essentially at
year-to-date
highs.
Continues on this little
that's pretty remarkable.
Outside of this channel.
Year-to-date lows. Again, almost no one was predicting this. You know, I keep calling this the Godot recession because you wait for it forever and it never actually gets here, and I'm not convinced that it will. But you're right. I mean, if you fight the trend, if you try to swim upstream, you get clobbered a lot of times, and that's what's happening here. Not to say that you should go out and buy everything you can get your hands on, but it has been a slow, steady grind. And even now, we've had something like 7 out of the last 9 sessions, we've moved higher without any sort of material pullback at all, which is frankly quite surprising. And that's especially surprising, in my opinion, because we do now have an alternative. That whole Tina thing's gone for good. You can put money into a 1-year CD and get 5%. How many stocks in the S&P 500 have 5%?
Remember the Treasury bill's 5%.
Probably Verizon and AT&T, and that's about it. There aren't many others out there that have that. It's frankly shocking that we're continuing going on. And that's not to say that I'm a big bear and I think we're going down, but you really would expect more of a sideways grinding or a little bit higher volatility. And we've got the debt ceiling issue that's coming up here pretty soon. as you guys talked about, some of these financial earnings were really good, but quarter after quarter,
maybe a temporary top here.
The better reporters are the early group, and then in the latter half of the reporting season, which we aren't even to the quarter point yet, tend to be a little bit worse. So we're probably going to see that go down, and yet, despite all of that,
kind of hard to sometimes read TA on these, though, especially in the shorter time frames. Longer time frames is a little easier.
Yeah, definitely. With that VIX settling at the lowest level in 15 months in yesterday's session, Kevin, still below that 17 level. So there's not a lot of uncertainty out there. Even though
it depends on what time frame you're looking at.
Global Fund Manager survey that got released. Allocation of equities versus bonds, the lowest level since 2009. So it's like a lot of people
the negative beta hit
don't believe in this rally.
2.5 years ago in January.
Some of the numbers, Goldman Sachs, decent numbers,
so
but then they took a big charge
data,
on their Marcus unit.
I think after
LMT,
2.5 years, though, I think
Lockheed
at this
Martin
point
doing
probably
well today. Johnny John's pulling back a little bit, but that wasn't a bad report either.
You know, I think when you look at this market for the next 3 to 6 months, let's map out a scenario. Let's say on May 3rd, they raise 25 basis points, Jerome Powell comes out and pauses, right? You know that Christine Lagarde's not done raising rates yet. Their inflation numbers are much higher than ours, even though ours are high. Now, I disagree with the theory that they're going to lower rates second half of the year. That I disagree with.
Guys.
But that
appreciate it. We got 38 likes. Well done.
Is going to cause the
Doing
euro
well
to
today.
rally against the U.S. dollar. And that's going to push, I think, the dollar into 2 digits. And that's going to be a fair
gas might be coming down.
to at least nibble on stocks down here and hold stocks
supportive
at these levels.
Of some sectors, especially tech.
U.S. multinationals are going to do better with a dollar that works its way lower. And remember, the dollar rallied so much because we were extremely more hawkish than other foreign governments. Now that's going to flip.
Yeah.
If we slow down and they have to keep up pace, that's going to work against the U.S. dollar, which will favor U.S. stocks. So there is some good case. The fact that we're so close to being done,
42. Thanks, guys.
I don't know how close we are. It appears
Thanks,
maybe
Julian.
one more and then a pause, and then look at data. But I think the next important thing to watch in the next 3 to 6 months is the U.S. dollar.
Yeah, and we've talked about that repeatedly on this show. The influence that it has over different asset classes
on multinationals
within the markets. Yeah. And to Kevin's point here, Randy, Fed Governor Bostic just came out and he stated that maybe one more hike and then we pause. But Bullard came out with guns ablazing earlier this morning in a Reuters interview, and he's saying he's still got his terminal rate above 5.7% at this point. I believe at least a 3.4%. On that bottom line. So he's still hawkish and says that inflation's stickier than the market's giving it credit for. Is that where we're going to see that rolling recession maybe coming into play that a lot of people are predicting, where maybe we just don't get a full recession, but it's rolling from sector to sector?
Yeah, in fact, that's exactly what's been happening. We have seen it. We've seen it go from goods to services without a doubt. That has absolutely happened. Kevin, I think, made some very good points. The stocks that were doing well recently, when the dollar was gaining strength, were the ones who did most of their business in the U.S. That is now flipping and going to go the other direction because the dollar has gone into what appears to be a longer-term downtrend for all the reasons Kevin just mentioned. It's time to start looking at some of the bigger companies, the quality companies who do a lot of business and get revenues from overseas. Those are going to be in a very good position here. I look at the futures markets, the Fed Fund futures. Right now, yes, the odds of another hike on 5.3 are pretty high. They're above that 65% threshold where it always happens. So it does look like, and again, we got a couple weeks to go, but it does appear that we're going to get another quarter point on 5.3. Then the markets pretty much go flat. So even if Bullard is right, that doesn't mean we have to get to that point by the end of this year. In fact, we could go into a mode for several months, which I happen to think will happen here, possibly the entire latter half of the year, of no rate hikes and no rate cuts. Yes, the market is sort of building in cuts. I don't believe that either, because the Fed's only going to cut if they see financial instability, and I don't see that, or if inflation goes off a cliff, and frankly, I don't see that either. The labor market gets crushed. I don't see that happening. But just a sideways mode in rates with no changes for maybe the last 6 months of this year would be I think would put a nice airlift underneath the equity markets. And then maybe if inflation creeps back into the picture, because that 2% target is a dream for the end of maybe 24, if even then. But if inflation goes sideways for a few months, then starts to tick up again, then perhaps they have to step back in around the beginning of next year and start adding a couple of more quarter-point hikes, which would be in line with, I think, Bullard's longer-term thesis. But what I'm looking at right now is the second half of this year. And as Kevin said, I see the dollar losing value, which helps multinationals. I see interest rates probably pretty much flat. All of those things, I think, puts a pretty good light on the second half of this year, which frankly has been what I've been expecting since the beginning of the year, that the latter half of the year would actually be pretty good. So that recession, I mean, we're looking at a 2.2, 2.3% GDP for Q1 here, which we're going to get in about a week. And I don't know about you, but this current quarter, which we're now almost a third of the way through, doesn't feel all that terrible to me.
Yeah, lowered expectations also helping. But, Kevin, if you look at it, some of the names that you mentioned, that weakening dollar, we've already seen moves in Procter & Gamble, Coke, McDonald's hitting all-time highs. They do a lot of stuff overseas. A lot of the staples that are multinationals, they've already taken advantage of the fact that the dollar's just above 12-month lows.
Yeah, and like I said, I believe that the U.S. dollar can go lower. And one thing Raphael Bostic did say in his comments this morning, he thinks that 3 to 3.5 level in inflation is going to be sticky. Yeah. Right? And because we'll have paused. Now, I'm not saying, we don't say always, and we don't say never, but there will be, it will take some event to get the Fed to back off and lower interest rates by the end of the year. So we don't say it'll never happen, but the odds are, if things stay as is, I don't see that happening.
Yeah, and I think that's the consensus out there at this point. All right, guys, let's take a quick break here, but then when we come back, we're going to talk about another stock that has earnings. That's United Airlines, up about 12% so far this year into that report after the close. Fast Markets coming right back.
Bed Bath just below VWAP now. 31.50. SPY moved back up to VWAP. What did you trade yesterday, Ace?
Trade for us here in United Airlines. Implied volatility elevated going into this report, but as I mentioned, it's pulled back over 20% from those March highs that we saw. Those were one-year highs above $55 a share. How do you want to look at this one?
So again, we're just trying to put together an example based on what some of the things I just mentioned, just an observation. If this is your perspective, look at the stock price. It's been in a channel for quite a long time. If you believe that this implied move, which is relatively small, makes some sense. If you look at historically, it hasn't made big moves on earnings, and you have to make a decision. Is it going to continue in that pattern, or is it going to break out from that pattern? Let's take the perspective of you think it might do what we've seen it do in the past. So what I thought was, well, this would be maybe a good opportunity to do an example of a neutral trade. A very popular neutral trade, as you guys know, is an iron condor. So I put together a potential iron condor, relatively short term. These are hard to do in a short term unless there's something like earnings going on and volatility goes up, as you mentioned. The implied vol is a little higher. So here's what I looked at. We know earnings are coming out tonight. As I mentioned, the implied move's about 2.5. I looked at a iron condor with expiration at the end of this week. So that's April 21st. And I set it up about 3 wide. So we're going to buy the 421 $38 put. Then we're going to sell the $41 put. We're going to sell the $44 call, and then buy the $47 call.
Just a wick
Again,
back
all of
to
these
VWAP.
expiring at the end of this week. This is a neutral strategy. Your goal here, ideally, would be to have it expire between the two middle strikes. So that's between 41 and 44. What you essentially have here, these complex four-legged trades are just two simple spreads. This is a credit put spread and also a credit call spread. Credit put spread's bullish, credit call spread's bearish. So one's trying to push it one way, one's trying to push it the other, and ideally you want it to end up essentially right in the middle. When I looked at this about an hour ago, I think 45 minutes ago, it was trading at about a 90-cent credit. Now this is a $3 spread, so that means you've got a 90-cent credit. That's your max gain, and your maximum loss is going to be the inverse of that, which is the $2.10. A question that sometimes people ask is, why in the world would I risk $2.10 to get 90 cents? The reason is when that happens, if it's a 2-to-1 or a 3-to-1 relationship, that also typically means there's about a 3 times greater likelihood that you're going to earn 90 cents than there is that you're going to lose the 210. So it's not just about how much your risk reward is, it's the probabilities of the two, and they tend to be about inverse. So this one, based on the 90-cent credit, you're going to end up with break evens at around 40.10 and 44.90. That's just about double the amount of the implied move. So you can see right there that if it's even close to the implied move, it's probably going to fall in that profitability range and even has a pretty good chance of being in that max gain range between 41 and 44.
All right, let's break this down. Short the iron condor here going into earnings in the April 21st monthly series. It expires this Friday in 3 days. Selling the 41.38 put vertical and then selling the 44.47 call vertical. Collected 90 cents. That means you've got $210 in risk on that. You see those break evens, as Randy mentioned, just above 40 bucks a share and just below 45. Kev, the anticipated market maker move was only about $2.10 either way, just under 5% either way, but this takes advantage of no movement and staying in that consolidation range that we've had for the last month.
You're a little short deltas on this trade because that 44 call is only about a 65% probability of being out of the money. The 41 put is about 73%. And so that's a little closer to at the money. That gives you a little short delta. So, you know, this is still an iron condor looking for a range-bound trade.
AMC's down 2.
What I like about what Randy did here, Tom, was if you try to do this $5 wide, there's no way you get $1.50 in terms of credit.
Right.
So you bring the strikes in to get to that 30 cents per dollar threshold. He gets 92 cents for a $3 wide.
Yeah, collecting
BBY
almost
above
1/3
VWAP
the
here.
width of the strikes on each one of those verticals.
See if we get a move,
You do have some
1:30,
risk
2
on those short
o'clock.
options into expiration this Friday, but a good
Oh,
look
is that me?
at neutral strategy here in
Oh, yeah, I
UAL
sold
as we
SMX.
think it's going to
Oops, I thought
remain around the
thought I
current
canceled
share
that.
price, which is just under 43
okay,
bucks
yeah.
a share.
Got more
All right,
money for
thanks to
BBY
Randy
now.
Frederick, Managing Director of Trading and Derivatives
Might have been a
at the
mistake.
Schwab Center
SMX
for
has a very
Financial
nice looking
Research,
chart.
helping us break down markets and UAL. But coming up after the break, Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion on Netflix, which has risen over 100% over the last 11 months. They got earnings after the close. Stick around. Coming right back.
I put an order out and I thought I canceled it, but I didn't. That's right. Made a nice profit on it. For a dip to get back into this thing. The longer term momentum's definitely up. Guess I'll get more bit bath. No, I'll wait, wait. SMX going up here. What's going on? Maintain, buy discipline. We'll do it, Dink. Thanks, man. Thanks for the support. I'll wait. I didn't maintain much this morning. Well, all day today. Not buying on breakouts. Always buying everything on the breakout and then selling once it falls support. EMDA. But today is a good day to buy it, I would think, on a consolidation day. And so I did. I bought it today. Tomorrow, maybe we'll get this gap fill. The downside. It has run up like 30-something%. That said, the RSI is still oversold on the daily. That's crazy. 29.90. Buy support, don't chase. But 30 just became support. I can wait for 30. But 32 just became support. See, I have it drawn right there. That's how you know it's true. gotten a little better fill maybe on SMX. Yeah, well, I thought I actually canceled it, but... Nick didn't talk sense into me. I should have kept my SMX. I wanted it for BY, but he's right. I'll just hold the cash.
Remember why I signed up in the first place. I think it might have been, reruns of The Office while my kids were sick or something like that. So eventually you start canceling these superfluous subscriptions. I don't think Netflix is necessarily in that category at all. Like you mentioned, Kevin,
rally today.
This is the king. This is the one everybody's going to keep. But I think there's a significant drop off in the demand that consumers have for those alternate streaming services. And quite frankly, I think Netflix will get caught up a little bit in that trend, because once you start canceling things, as a consumer, it can really snowball, and even Netflix could get caught up in some of that, especially as they start punishing password sharing. So I think Netflix, king of the basket, but this basket is moving the wrong way, maybe towards a waterfall.
Yeah, and that streaming the mentions chart that you had, it seems like just recently this quarter, we're starting to see a little bit of an uptick after a pullback. Is that sustainable here for Netflix? Because I think we all kind of can come to the understanding that Netflix is probably going to be the winner in this space due to the content that they have and the head start that they had in this space. But it seems like we're starting to see a little bump up, but you're still negative on this?
Yeah, still negative on it, because the bump up is being shared by so many competitors now, and what investors have gotten used to with Netflix is total domination and nothing but up and to the right in terms of growth, aside from what really shocked the market. I think it might have been this quarter last year or the quarter after, where Netflix really had to reset expectations. So, that kind of growth, that Amazon-like growth for Netflix, is probably in the rearview mirror. And the initial shift that we're seeing, right now towards less viewership of Netflix specifically is, at least concerning. And it tells us that executives will probably have a difficult time getting on this call being super optimistic about the rest of the year.
All right, and no Reed Hastings on
Thanks,
that call.
guys, for your likes.
Andy, you guys seem negative. Do
Appreciate
you have
it.
that earnings
It's
score for
12:35.
Netflix going into this report?
45 of you.
Yeah, pretty bearish. We think that the stock is due for a pretty significant pullback on this report.
All right, there it is. Data from Likefolio again. Appreciate it, Andy.
All right, have a good one.
All right, that's Andy Swan, co-founder of Likefolio, breaking down the data for us.
Well done.
Boy, what a 180, Kevin,
All 45,
from
yeah.
last quarter.
Nice consolidation today on
here's the
BY, up 15%.
I agree with
Hold steady.
everything he's saying.
Just seesawing back and forth around BY.
Netflix, about streaming in general. I think we're getting to one of those moments where you're going to start seeing some of these falter. Now,
Chupacabra movie?
But here's the thing, Tom.
I haven't seen it yet. It's good.
This password sharing is a big deal.
Yeah,
That-
we need
that
clarity
your
on
hometown?
that. They've got to give clarity on that.
I think ad-supported tiers are a big deal.
Right.
I think they're going to cut expenses. I think you're going to see less movies that are more expensive, more TV that is less expensive. I think there's a lot of things that they're going to do that's going to make these numbers soften a little. Do I agree with Likefolio's data? I do. I think there's another side of the ledger that could make this okay. Now, it still worries me, and my strategy here is neutral to bullish, and I feel a little less committed to this neutral to bullish since Andy's data came out, but I still think there's other things that can soften the blow here. Now, these other names, No, I don't think so.
Yeah.
But Netflix is the clear winner. They're profitable every quarter, Tom.
Yeah, and they guided for a cut in expenses. They're pulling back on that. Free cash flow was positive by over $1.4 billion last quarter. And that's supposed to triple by 2026, according to the company. So there are some positives out there. And remember, it's been cut in half by more than half over the last year and a half. It was $700 stock. It's now $338.
I still think that Netflix has a chance. I don't know to still impress because of the other things that they're doing. Adjusting the expense side of the ledger. It's something that Folio really didn't address. That could save it. If not, if it doesn't, then they're even more correct.
Yeah, let's go through these example trades that you have for us.
It wasn't really at a resistance,
a little bit bullish, but also a little bit neutral, where you're giving yourself a little bit of cushion.
If nothing happens, this is a profitable
trade.
Like
a momentum was dying down.
I did two
liquid on the
simple
5 minute
trades
to see what's
or
going
fundamental trades that turned into a complex trade. I looked at the expected move, Tom, from 333. $27. I sold the 305, 300 put vertical. That's the first trade.
5.6,
right? And then you combine that with the 350 call calendar,
for support,
and you get that graph that Maria has put up on the board here. And the net is only about 30 cents. If about $1.25 and 97 cents. So you don't have a big capital outlay. Your risk on the downside is the $500 because you're selling one of the $5 put verticals. So this isn't a big capital outlay or big risk. Now, you don't have to do both. You could just do the short put vertical below the market, and that would take you all the way down to a pretty good level on the chart, about $305, $304.
Right. Bought some 3M.
And so that would be okay. So, but if you don't think this is right, if you believe Folio's data, which that data is pretty solid, this might not be the trade.
30-31 on eToro.
And on the opposite side of that, if you sold a call vertical versus doing a put calendar.
You could flip this.
Yeah, flip it. No, but let's take a look at these two example trades. Buying the 350 call calendar, that's 1 week wide, buying the April 28th weeklies, selling the near-term April 21st monthlies, paying roughly about $1.40 debit for that. The put vertical that you sold against that in the April 21st weekly cycle that expires in 3 days, you're collecting roughly about $1 on that one, maybe 105 is what we had. So your risk to the downside, as Kevin mentioned, is below that 300 level is the $500 or the $5 width of that short put vertical, plus the added 35-cent in debit on that. So you got about $535 in risk below 300 on this. But you've got some risk to the upside also, which would be that $35 extra that you paid if the stock exploded above $400 a share, which is not out of the realm of possibilities because we've seen some massive moves in Netflix stock. But just taking two strategies for some upside. But the break even, Kevin, on this is about 305. Right about that 305 level. So you do have that cushion to the downside, as Kevin mentioned. They're expecting about a plus or minus 8% move in the shares on this one. You do have some assignment risk on your short put, on the put vertical, and your short call on that call calendar over the next 10 days on that one. But good look at two different types of strategies if you think it's going to maybe grind higher or at least remain where it is into that result after the close. All right. Coming up after the break, we're going to take a look at Morgan Stanley, which has risen about 5% so far this year and reports quarterly results tomorrow morning ahead of the open. Fast Markets coming right back after this short break.
Head and shoulder bottom, like an inverted head and shoulder. George W. Right there. Bigger W for winning. Oh, there's the flush on SMX. Yeah, maybe to VWAP, we'll see. Might pick up some more of SMX. Where it gets to. I guess I did get a good exit. Would have been hard to get that exit. Probably $2. The next support if it breaks VWAP. Might be a buyer at 2. Show support there. Doesn't show support. I'd wait. Maybe get $1.70 again. This high from back here. A low from right here. I don't know if it'll come down that far though.
Oil lower here today, and IEA actually sees China is driving the majority of the growth in 2023. Keep in mind, we saw those OPEC cuts, which sent price up to 83.53, recently back down here. Now, in terms of that weakening global demand, I think you can chalk it up to I've got rates on the rise as well. The 2-year back to 4.15, the 10-year at 3.58, the dollar hanging out around 101.50. But I did notice price at the pump. You know, I keep a close eye on that, Tom. This week, we're talking today at 367. Last week at 360, last month at 344, so that trend to the upside continues there.
Yeah, and I was surprised that we didn't get a bigger lift after those China GDP numbers, which were above expectations. Maybe some of those demand, constraints coming back at this point.
But moving back to VWAP a little bit.
Continue to watch oil there. And thanks to Ben Lichtenstein, host of the Future Show here, breaking down markets and crude oil. But now let's bring in George Tillis, senior markets correspondent here on the network. We're talking another bank here, George, and this is Morgan Stanley. I always kind of look at Morgan Stanley in the same breath of Goldman Sachs, maybe as far as investment bankings, exposure to the IPO market, and some others. But, you know, Goldman Sachs took a big charge on their markets division. I'm not sure if Morgan Stanley has the exposure there, but we've already seen Morgan Stanley
Tree, were you the
quite
cause for that thing to start dropping?
Maybe 4 trading
Did you do this
sessions.
again?
What are your thoughts here on MS?
Did you look at your spreads before you closed it?
Well, that's the issue with Morgan Stanley. You got to look at this company as more of a pure investment bank. It's not a commercial bank or a custodial bank. You know, companies like State Street or Bank of New York Mellon, which we know have been challenges of late from a custodial standpoint. So I think that's actually probably one of the good things about Morgan Stanley. It's a pure investment bank, institutional brokerage services. The other thing is retirement plan services and wealth management. The other thing is they have their trading, fixed income, as well as commodity and currency trading. So effectively, they don't necessarily have the consumer lending and a loan portfolio that the big commercial banks have. They don't necessarily have the major deposit base to deal with in terms of liquidity issues. And I think the Goldman Sachs concerns are really focused on their consumer lending division, which
it's killing all morning. Did you buy back in? Because I thought you sold.
Investment bank play, and I think that's one of the reasons why it's held up well. Now, the quarter is expected to be down both in sales.
I guess
and
that was last
earnings.
week on Friday.
About
right here.
In earnings,
but this one you closed.
Down about 12% year over year.
$3.
With sales also to be expected around $14 billion, down 5%. So they're already giving us some inkling that there's going to be some lower deal making from an M&A standpoint. IPOs have sort of dried up in the past year and a half or so. Trading has actually been quite robust. I think wealth management is a little bit more consistent in this environment, and there's less thought of the quality to other institutions when you think about Morgan Stanley, because there hasn't been any risk from the standpoint of deposit flight, and also the other aspect of their their consumer lending, which they don't have. And I think that's a good thing in this environment. That's why the stock is held up.
You know, George, in 2010, Morgan Stanley got 25% of their revenue from wealth investment management business. Yep. Now it's over 50% of their revenue. It's more durable. It's more consistent. That's why I think this stock has kind of outperformed when the banks were in crisis. So the question, George, is if you're trading this, do you look at it more like a Goldman Sachs or more like a JP Morgan, Bank of America? Or is this one of those true, it's kind of right in the middle? They've got E-Trade. Yep. You know, they've got
GME,
massive investment banking that you mentioned, institutional banking. Where do they fall
you just
on that
got your
spectrum?
cost basis back? I see.
So I'm going to put it more in line with Goldman Sachs, but they also sort of fit in the middle because they're not a pure lender and they don't have, like I said, the commercial banking division
sold at a fine point.
Goldman has. They're not reaching
consolidating.
For yield. And I think that's one of the things you have to consider when you're looking at the financial sector right now is
I guess that is
which areas are not necessarily those that are exposed to net interest margin, those that are exposed to more consistent wealth management and institutional trading.
Might be consolidating before new highs,
better. And I think that's one of the reasons why you have to look at Morgan Stanley outside of the same
momentum stopped though that first red candle. That was a good
the
call.
larger commercial banks like JP Morgan, but also traditional investment banks like Goldman with the lending and banking divisions that company has. So I think it's a pure play. It's all on its own right now, and I think you have to look at it that way. We'll see what happens when it comes down to, of course, the earnings. I'm sure there's going to be a little bit additional credit provisions set aside just in case, you know, they've got some constraints, and just in case also they haven't managed or hedged their interest rate risk from their fixed income portfolio. But I think the language of the market, like I said, is speaking volumes when it comes down to these names relative to some of the underperforming areas of the banking sector. So right now the market seems to be preferring companies like Morgan Stanley, the larger commercial banks that has deposit flight into, whereas I think, you know, Morgan Stanley has grown its business outside of trying to reach for yield, and I think that's a healthy way of doing it, especially when you're trying not to, of course, crowd into areas like banking that you don't have a traditional exposure or experience or history in.
Yeah, I think it's going to be what offsets what on this this earnings call, because trading revenue is supposed to be pretty robust, especially in fixed income, and net interest income is expected to rise about 12%. So we'll have to wait and see on that. All right, thanks to George Tillis, senior markets correspondent here, breaking down
that's a good way to exit.
Ahead of those results after the close. Kevin, just real quick
here. Problem.
You know, we've seen some decent
numbers. I thought
you
talked about it with me in here.
Maybe some of the weakness in IPOs and M&A activity.
IPOs and M&A, you saw it in the Goldman's numbers right there.
Buy below VWAP.
Significantly,
here a
the
bit.
Goldman numbers. Let's see. M&A, fixed income, commodities, and currency down 17%. Equities down 7%. I mean, they, mergers and acquisitions, IPO, something that Morgan does with Goldman, they've grounded almost zero. Now, here's the thing, though. Fixed income.
Yeah.
That's where they kind of shine.
They did a couple quarters ago,
yes,
right?
Right. So that's where they may be gaining
Took
ground.
a little short up here.
They have some ambitious
I'm out of net
goals.
gas, so.
They want to raise $1 trillion in new assets every 3 years, and they have a goal of raising $10 trillion in client assets. So they're in the asset gathering business right now.
And SMX are right back up.
Those,
that was probably your exit trade.
Management fees, they're pays a lot of money. That this is a big cash generation.
You gotta
for
look.
them. So
you gotta look. That's their
they've got
spread.
a lot of positive things to report in this thing, but like I said, it ain't going to be M&A, it ain't going to be IPOs.
Yeah, and I wanted to look at a strategy. We talked about it earlier with Randy, where we had the short iron condor. We've got another short iron condor, but it's a little bit different. We sometimes refer to it as an iron butterfly.
Here, that way.
But just going out to that same April 21st monthly cycle, so 3 days till expiration, where we're going to sell an iron condor, but we're going to have a common strike on the short call and the short put on the 89 strike. So you're going to sell that 89 call and put, and then buy the 85 put against it, and then buy the 93 call against it. So a short $4 wide iron condor, sometimes referred to as an iron butterfly, collecting roughly a credit of 265 on that one. So that takes your break evens down to 86.35 to the downside and 91.65 to the upside on this one.
Old fatty
option markets pricing in, Kevin, about a $3 move either way on this one. Your thoughts on the short iron condor?
Here's the theory behind this kind of a trade late in the cycle. This is the last financial significant one to come out with earnings. And a lot of the movement's already been in the stock. So you can make the case that this reaction will be underwhelming because they've already moved with some of the other earnings.
That's what you want on this strategy.
That fits this strategy.
Slow grind up after a big gap up.
And to your point, that's why I wanted to look at this example trade for people, is that over the last 3 or 4 trading sessions,
I mean, GME has the momentum now to the downside.
It's up 6%.
It's moved with JP Morgan, it's moved with Bank of America, it's moved with some of the other banks. So maybe
been looking at the
you can make the case or the theory that the move is
bounced off this trend, but
this
is a downward sloping trend line. So
this is the strategy that would work there.
I keep grinding down here, then that's bearish.
Towards their 50 and 100-day moving averages, which might act like some resistance at this point. But this is
I would say it's bearish
neutral strategy. Kev, real quick here, we're just kind of
probably is too,
wanted to get your take here. VIX continues to move lower. Stocks relatively flat. We don't really have a directional bias at this point. Yields are down just a little bit here, relatively flattening out. Your thoughts here?
Everyone thinks the VIX is cheap. It isn't cheap. Historically, it isn't cheap. Now, it's cheap for the last 48 months, 24 months, right? But
I think he's still bullish, but we're under VWAP.
All those risks are dissipating, and the VIX could go easily go below
perfectly
50.
at that 414.24 pretty
earnings
much.
After the close here, Kevin, Netflix, I think will be the telltale sign for especially the tech sector heading into tomorrow. But that's going to do it for Kevin and I today here on Fast Market. But stick around right here on the TD Ameritrade Network as Next Gen Investing is coming up with Alex Coffey and Jenny Horn. Have a great day.
And I. Oh, BY popping. I'm waiting to buy in. Waiting to buy in more. It's above VWAP. Moving up here a little bit. A little volatile. I think it wants to make a breakout. Right around that 1 o'clock. Likes to move around the hour, half hour. Margin calls at 1 o'clock, right? So, I mean, there's always that. Gary's testifying right now? Interesting. What was Monday wrong? Gary. Ooh, your margin called this low. That's a joke from yesteryear and FX Trade Hedge, or FX Trade. But someone that over leveraged and opened their short at the lows doesn't take much. Their longs could have gotten messed up. Who knows? It's normal for 97%. See if BY is gonna make its new high of the days here. It is moving up. At that 1 o'clock. Need more money for stab. I'm not going to talk about a specific case stock situation. Oh yeah, we were seeing some of the tweets from that earlier. He was saying, oh, he needs more FBI support, or I don't know. Does he say FBI? Alright, Bed Bath, let's see it. You've made your winning W formation. Something going up against people with the deposit deepest pockets. Some X with a bounce. Nat gas is now coming down. I got whipsawed a bit on nat gas. Gave back my futures gains today. It's hard to trade sometimes because it's so, I don't want to say a liquid, but it just moves. It moves like that, so. Okay, I missed my good entry this morning on it. Try and get another good entry on that gas. Even took a short, went back long. Yada yada yada. Back to break even.
Our FOMO name as NVIDIA after a bullish call from HSBC. And then, of course, we'll preview Netflix ahead of their quarterly report, which is expected today after the closing bell. Last but not least, our under 30 name is Bellis Health after we're seeing some M&A activity continue to pick up really in the overall healthcare space, Alex.
Yeah, that's been a kind of a developing theme as the year is starting to roll on. Looking forward to the Netflix preview, so that'll be a fun one. Then NVIDIA, just, I know it's not even quietly outperforming. This thing is like in your face outperforming. It has just been a monster run for the semiconductor maker that has been tied, of course, to AI. So any chance we have to talk about NVIDIA, I will gladly participate. But let's start with upvote, downvote, not endorsements, not recommendations. First one here on the list is one of those big banks that you mentioned. And I would say this one is underscoring that maybe not living up to expectations sentiment that you suggested.
Right, all things considered, I mean, it's down about 1.3%. It's definitely our laggard of the group, but it's not seeing some mass selling like the headlines would make you think. Now, they did report lower profits in their first quarter, which was hit by the continuing slowdown in deal making, as well as a sizable loss on a sale for part of its Marcus personal loan portfolio. Now, they said their quarterly profit was about $3.2 billion. This was down 18% from a year ago, whereas peers like JP Morgan, Citigroup, and Bank of America all did report higher profits in their quarterly updates. This did amount to about $8.79 a share, which did beat street expectations. Revenue missed though, coming in around $12.2 billion. This was down 5% year over year. And this miss really reflects some of the challenges Goldman has faced as it pulls back from its foray into consumer lending. The bank also announced Tuesday the transfer of the rest of its Marcus loan portfolio from held to maturity for sale. Now, their first quarter was also impacted by the broader slowdown we're seeing in deal making that has really plummeted some of these big banks since a banner 2021. Investment bankers took in about $1.6 billion in fees for the first quarter. This was 26% lower than it was a year ago. And the CFO highlighted this on their earnings call, saying that this is not Goldman specific, but something they're now working through as an industry collectively. They did also say they're exploring their sale of Green Sky, which is their company's lending platform. So not a whole lot to be excited about, not a whole lot to be pessimistic about either, which is perhaps why we're seeing the selling today, because it feels like if you're not able to provide good news right now, it's like no good, bad news is just basically then the read.
So they were expecting about an $11 reaction. We actually got a little bit of outperformance of that initially. And it's basically cut that in half, and it's barely even down now. I would almost call this an unchanged reaction at this point. For those who caught Fast Market yesterday, we previewed this one. We looked at a trade illustration. I described a scenario where, you know, to me, an unchanged or inside the move type of reaction made sense. And the reason being is simply optimism had built up in Goldman Sachs before this report. But we kind of understood, you know, how things were going to go. They didn't necessarily deliver anything better than expected. And some points it was a little bit worse than anticipated. But it was still a decent report, still a decent quarter, and it's been repriced there in reaction. But to me, this is just the nature of a name that isn't the first we've heard from its peers. We had heard from JP Morgan, we had heard from Citigroup, we heard from Bank of America this morning as well. There wasn't just a lot of new here, and because of that, I think that's why you're seeing sort of a muted reaction here. And it's only getting better as the day rolls on, in spite of the fact that the market's still red.
Yeah, I think that's a good takeaway here. We're definitely off the session lows in Goldman Sachs, so I see the headlines that it was a huge disappointment. I don't think that's necessarily telling the full story, but our next name today now is DraftKings.
Still around VWAP here.
Morgan Stanley did raise its price target on DraftKings to $23 a share from $22 with an overweight rating. This is a name that has price targets ranging all over the place, from $15 a share to $38 among analysts covering this name. Now, this analyst from Morgan Stanley back in February did remove it as a top pick following its 80% year-to-date rally, which has given up about 1.5% now, but still we're pretty much around those levels currently. DraftKings has seen, though, 11 states turn contribution profits this year, and this analyst does believe this opportunity should only continue to grow, but is just moving more on the sidelines as a result of the fact that this name has been a consistent outperformer. And a stark contrast to the name we discussed yesterday, that being Penn Entertainment, which has been, able to hold on to I'd say a relatively nice move this year. Nowhere close to the outperformance we are seeing in DraftKings, though, Alex. This name's now up 108% off their 52-week low.
Yeah, I'm going to say downvote for this, as we did for Goldman as well, but I still think it's a fun name to talk about. It is really the pure play for this online sports gaming movement, and really beyond that too, as they step into things like online gaming as a whole as well. But we talked about this with Penn. Penn is no longer, sort of just the legacy regional casino, as well as the Barstool Sportsbook. It's really all of the media stuff that Barstool is doing from an ad standpoint, from a merch standpoint. So they're just harder and harder to compare these two companies. Certainly one to watch. And I can't believe just how impressive this comeback's been for DraftKings, under a ton of pressure. It's one of the few SPAC names that's actually done okay, all things considered. I know it's way off its highs, but all those SPACs beginning at
SMX kind of consolidating there at the highs.
Go at it at this $20 mark, but gonna say downvote here. Really nice March Madness for the books, but we got a long time before football season starts. Sort of the doldrums of summer are rolling in for the sports books. So we'll see how they fare in those quieter times. Next one on the list, though, is Starbucks. And as weather starts to get a little bit nicer, I just imagine business is booming at a place like Starbucks.
Okay, and actually I can speak to that because I rarely go to Starbucks, but I was there this morning and it was packed, and I was kind of wondering, do any of you people work? Because everyone was sort of just hanging out at Starbucks, but hey, more power to them. But we did see some analyst news today. Evercore ISI adding Starbucks to its tactical, or adding a tactical outperformance.
It happens at 4/12/24.
Saying the company will climb the wall of worry now in 2023. The firm is also raising China same-store sales growth forecast for Starbucks as well as Yum Brands for the rest of this year, as mobility appears to be fully back per their rail data analysis. Now, Starbucks, another name that has, I'd say, a wide variety of coverage. They do have an average rating of outperform among analysts, so definitely a more bullish leaning name. But they have price targets ranging all the way from $86 a share to $138, which 86 does imply about just over $20 of weakness from where we currently are. Shares are up about 0.3% on the session now. Another name, though, in the restaurant space, which is, I guess, where you put them, or consumer discretionary space per se, they're up about 9% this year. Even more impressive than that, they're up about 36%.
I don't know how you stopped out. It's just been grinding up.
So I think the resiliency over the last year has been one that's astounding. And a lot of it has to do with their turnaround plan to now close some of their less profitable stores, Alex, and now focus more on ways to make each store efficient. Because with all these customizable drinks, they've got to do something. And I know that's been a concern from a barista standpoint.
Yeah, and obviously resilient in the end, but I almost would say that this was a comeback story. This stock was under a ton of pressure. It came from over $125 a share down to like 70, and it's bounced back like 50% off those lows. This has been a really, really, really big comeback, and a name that has got a ton of locations. We talk about and joke about, and something Kevin always says, is sort of how this company symbolizes scale and how they're literally everywhere. Some locations, they got one on each side of the street because it's hard to cross the street. So, when you think of Starbucks, you think of, everywhere. That's kind of how you think of it. It's ubiquitous. It's capitalized on the routine. And it's busy.
Those wicks stopped you out?
The product, in spite of the fact that it's certainly a premium. But going to say upvote for this. We don't hear from them for earnings.
There's SPY double tops here
of time, but it is dangerously approaching.
It is, and now our last name
little
is
wider
also
spread
a
on your
comeback
stops.
story. That is Las Vegas Sands, which is set to report their first quarter earnings tomorrow after the closing bell. Another name that's seen some significant outperformance this year, up 25% since the start of 2023. Now only down about 1%.
Depends on where you bought in, I guess. If you bought in on a high, it's harder to.
Low and up 108%
You're green for
so a really
a lot of this.
Chart on a year-to-date basis, but we got Morgan
trading
Stanley today maintaining an overweight
it's too bad they're going
rating
to
and
stop down.
increasing
It
their
keeps
price
going,
target
absolutely.
to $64 a share from 62. And in February, this company did report its fourth quarter results that pretty much sizably surpassed analyst expectations on an adjusted basis. They did also reveal plans to spend about $3.8 billion on concessions over the next decade,
resistance from
with
earlier.
about $2.7 billion allocated to capital projects and $1.1 billion to their operating expenses. So this company has laid out ways they plan
I think you can still fill that gap
their balance sheet
today,
casinos,
after hours, maybe tomorrow.
In that Macau region, which
maybe
we always
down,
joke, Las
open
Vegas
down there, I don't
Sands
know.
is one of the most ill-named companies out there because its exposure is actually much more overseas than it is actually
longer
Las
term,
Vegas.
though, it's looking
I was looking
better,
at the outperformance.
better,
It's amazing
good,
to me that MGM
upside.
as well as Wynn are both actually outperforming this name this year, up about 38 and 33% respectively. So while this name looks strong, it doesn't look nearly as strong as some of its more U.S.-centric peers.
There's a bounce off VWAP
nice
for
Bed
Bath.
As you said, though, as we're really starting to see that reopening take effect and benefit
Hey,
some
kitty
of these
daddy.
names, especially those with overseas exposure of
which YouTuber saying must be with BBY president.
Think Venetian, think Palazzo.
Sue?
If you're thinking of where on the Strip in Vegas you may see
crazy,
a Las Vegas Sands property.
speculation I haven't heard yet.
Gonna say upvote because this is simply an earnings move.
Is that
we're gonna have earnings tomorrow after the close, and
excuse for this rally?
Anytime we have a chance to talk a pre-earnings stock, especially one that's had a nice run, I think that's fun. So gonna say upvote.
And markets must have liked what you just said, Alex, because now we are seeing some more green across the board and a nice move higher today in Las Vegas Sands, of course, up about 2.6%. But we'll be diving more into the technicals on both Starbucks as well as Las Vegas Sands coming up next. We'll also be looking at some example trades. Stick around.
Virgo. Hi, Jenny. Spy breaks here. I'm gonna close my shorts. Alright, SPY did double top there, it's coming down. GME down 1.5. MCOM gave up quite a bit. Looks like a day behind Bed Bath as far as price action. MNMD looks good. MindMed. A lot of volume the other day. MSGM actually looks like it's starting an uptrend too. These 2 days of fake pump, go to their FTDs. I don't know the specifics of why it pumps. I don't. So far, I think it's going to be limited to 2 days. GME retesting this level here. Might break through though, trays. Might break down. I know I was looking at maybe getting puts on it. It's just it's moved so slow the last, really since earnings. It's just gotten tighter and tighter in consolidation. So probably a good time to actually get puts on it. It's gotten cheap. So yeah, got SLD too. Okay, I did get some GME puts. I was gonna get spreads, but IV's so low, I'm just gonna get straight puts. Not super, a little more risky. Don't have a ton of time. They're not quite at the money. We got May 5th. That should fully cover OPEX, which is this week. And if we, I don't know, probably close it by this week or early next week. I got 21 strikes, so a little bit of IV down there to get some more percentage if we do start to actually move quickly on GME. Let's see, 0.4 today? Yeah, we could, absolutely. Yeah, 40 cents could be happening today. Sold? All of it? No more scaling? You gonna put it all in a BBY? Now or never. Kidding. Do what you want. All of it. Wow. All right. Congratulations. Congratulations. You know what, Ace? You can always buy back in. So if it comes down here, back to 17, 18, 16, 15, and you want to trade it, always buy back in. And if it does get that far down, you'll be able to buy 25% more for the same money. So, you know, big weight has been lifted once you start to realize what you just did. Awesome. You realized gains on that too, didn't you? That's insane.
From the analyst, $64 price target, an earnings event that potentially provides.
Yeah, if it gets back, it doesn't have to get to 15 necessarily, but you know, support might come at 17 or.
I looked at a call calendar to the upside, so this is a strategy that would benefit from this
jump back in
move
for
to
a swing
particular level
or long, whatever.
The market maker move, which of course is by no means a suggestion of what is to happen, but rather
you're really not going to average down BY though.
Prices and providing a
risky, if you want to get risky.
Basically a one standard deviation price range up or down.
After all this,
that options suggest
now it looks like it's reversed.
Play around a particular binary event. And so in this case, there's an earnings event tomorrow afternoon. Right now, the market maker moves about $2.50. So for a stock that's trading about $59.50, $2.50, if you simply just added that to it, you're getting somewhere around 62. Well, in May, there is no 62 strike. There's only a 62.5. And so with this, and the crux of this trade was really buying that 62.5 call in May. But because there's so much volatility in these near-term options surrounding this uncertainty of this event, there was still an opportunity to sell that really short-term this Friday's monthly April expiration, the same strike call, and still get some premium to chip away at that debit spent on that longer-dated call. And so in this case, that whole package was priced around a $1 debit, which would mean $100 in risk if this one were to not basically pan out and reach max loss. And so I think the risk profile does a better job of explaining how this one actually seeks to perform and what you're really hoping happens, because you're looking for a move.
You don't think this is a reversal,
strike, but
and
if
you
it
can get back to
overshoots it, you can see that
80 cents or
the
a
risk
dollar.
and reward starts to go the other way to the
Then
upside.
yeah, it makes sense not to average down. And it almost makes sense to even sell then.
It does better the more precisely you can basically specify a particular level that you think the stock's going to go. And so if you have a different opinion, if you think the stock's going to go lower or it's going to go higher or go to a more neutral level, you would choose a different strike. potentially even choose different expirations depending on what your time frame was.
Right, of course, the importance of highly customizable trades, especially into these earnings events, but also important to keep in mind both of our example trades today. They do contain multiple legs that can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk like unanticipated exercise or
we could still get filled. We could still have a rip up to 50 cents, 40 cents, and fill that. Volatility to the upside will also be increased to the downside, so
bullish analyst call, the latest in the string
they'll
of bullish
swing
analyst
big
activity
both
on
directions.
NVIDIA. We'll dive more into that coming up next.
But if we continue to just rally and consolidate, yeah, if it doesn't get volatile to the upside, which it hasn't really yet. Both these days have been quite, stable, really. Then it might not fill. But I don't think that'll stay the case. I think it'll get some volatility to the upside. $50% in. Like 50% in what you want to be. You got another half that you want to put in. What you've already invested. SMX has held up better today than the other day. Man, that Friday sell-off was it's only Tuesday. It's 130. We've seen a big move. We've seen over 30% in the last 2 days. That's a big move by any standard. At 34%. After dips are over 40. Nice. Inside reversal closeout calls and buy when dip. I know, Ace. Yeah, you were traveling or whatever. But I mean, yeah. I guess I could have just as easily been bummed about that decision if it just dipped and then ripped. Who knows? Like with how weird their share offering is and their debt restructuring and all that. Who knows? I could have been really bullish. Them closing down these warrants and preferred shares and all this mess, and just going to a straight share offering. So, I guess I got lucky, but luck is usually luck for the most part. If you have experience, is preparation met with opportunity. I guess I was prepared and that was the opportunity, but it didn't feel like that because I was taking a big loss. Yeah, there's no way to know though. And it's not like you couldn't have. I mean, you still could have sold. You had later that day. You had a lot of days you could have sold. You just didn't want to, which I get. You know, that first day it dropped. You're like, oh wow, 50 cents, but it dropped a lot more. I mean, you were in on chat, so you probably had some kind of internet, right? It dropped another 60% from there, which of course no one knew again. This was crazy. This was a lot. I wasn't expecting that much either. Yeah, I've been in and out a few times. Signs that I see are reversal, I'll get in, and if it breaks through a certain support, I'll take a loss. See, this will be my second or third entry. Yeah, this is my third entry since, I don't know, since $5 or so. Closing somewhere around here. I did one right here, close that out. I did another one right here, close that out, and yesterday and today.
Or delay their flights in order to resolve the issue. That is the most prudent thing, is to make sure safety is number one on everybody's mind here. So I don't know if it's going to have a major impact on consumer loyalty, especially as we enter into the traveling season in the summer here. So I
might not get either. Might just get a nice,
everybody's perspective
nice grind
is
up.
a little bit different. I program as a high.
How much of a rug pull from here?
So I've seen issues before.
Even if we drop back down to 27 cents.
I'm always a little bit more sympathetic when technology issues do arise. And luckily they were able to resolve it in a pretty quick manner and getting things back up and running. And once again, we probably will start seeing or continue to see maybe some hiccups when it comes to scheduling for today, but tomorrow it should be resolved and should not have any issues moving forward here.
You know, Kevin, I'm in the same exact camp. It's like when there's a winter storm in Chicago and everyone's so mad at the airlines that their flight can't get out. It's like, what do you want these airlines to do? I mean, I would appreciate that Southwest is prioritizing safety, especially when flying. I'd say, do whatever you can, make sure that the planes are safe before I get on them. So I completely get it as well. But we will leave it there. Appreciate all of your thoughts on this interesting story with Southwest lower today, despite some overall
double bottom,
huge
volume down spike for some reason. Hoping again with the upside.
Now I'd like to
Probably a
bring
good
back
long
in
even
Alex
here.
for FOMO. And Alex, NVIDIA has been like the story of the year. Hard for it not to be, with shares up 90% now in 2023 with this move higher today.
Why can't you trade on cell service?
To the upside. I mean, this
you're on chats, you're on the internet.
Winning, it feels like.
Yeah, I think the question now, and it's the perfect candidate for this particular
segment, it's tough if
you're
not paying attention to like make a big decision like that.
Move beyond this simply the hype? Is it simply the fear of missing out? Is this pile-on effect, or is it still warranted? And the jury's still out on that, obviously, right, Jenny? But we are getting that pile-on effect. We are almost getting that FOMO effect from analysts. And you can't sneeze at that rally. It's massive. It's obviously been on news. It's been on hype at the same time. But there just seems to be a lot of things clicking for this company at the same time right now on the positive
front. Hyped up on Mountain Dew.
Obviously, we know that the story of it being associated with AI. Well, we know that some of the biggest companies in the world are plowing a ton of spending into R&D into that space. And if they're positioned to be where some of those dollars go, that's clearly a positive. There's no way to spin that other than that's positive. Even crypto is starting to make a little bit of a comeback. We know that these names in these kind of like high-end graphics cards processing have been tied to that. But beyond that, we've just seen optimism in chips in general. Even Intel, which seemingly hasn't been able to do anything right for the better part of the last decade, is turned around and has been a pretty strong performer. So a lot of things coming together at the same time, and it's been beneficial for NVIDIA investors, particularly given the fact that this stock was pummeled last year before it turned around. So it's not like it's rallying from all-time highs. It's trying to get back to its all-time highs.
I think that's a really key point, too, especially because they're lapping pretty easy comparisons. George Tillis yesterday mentioned when we were talking HPQ that the PC cycle right now is up for renewal. Another benefit, but this is also the PC market was pummeled. So it's all relative, I think. But we did get some analyst news specifically today on NVIDIA with HSBC upgrading shares from reduced to buy, while also hiking their price target to $355 a share from $175, which is a 100% price increase. And the firm did say the AI opportunity for NVIDIA more than offsets some previous concerns about data center slowdowns and rising inventory levels. They said NVIDIA has been among some of the biggest beneficiaries of this AI revolution that is taking hold following, of course, the popularity of ChatGPT and everyone looking to get into these open language models like a name like Alphabet. But their powerful chips power most of these models. So like you said, therefore the stock is seen as one of the strongest beneficiaries of this broader push into AI. And really the stock is among some of the best performing mega caps this year. It's hard to argue with some of the strength we've seen this year with shares up 90%. Like you said, we are still off their 52-week high by about 1%, but we have since been in a fierce velocity to the upside really since the start of this year, which has been amazing. And we also got some news today that Elon Musk is planning to launch Truth GPT, which he says is more of the truth-centric, non-profitable aspect of AI. As he's been a pretty open criticizer of all things AI, saying it's like the end of humanity. But he has also said that his engineers are working right now with the processors behind NVIDIA, which is always good to then be tied, you know, as a name like NVIDIA, to be tied to that headline. I'm super mixed on the name, honestly. I'm mixed on the whole concept of right now Elon Musk's basically AI push, but I do know that that is another area that looks like NVIDIA stands to benefit.
Yeah, I mean, it doesn't matter to me who's spending on it. If you're looking at this objectively, it seems like a lot of those dollars are being spent at buying NVIDIA graphics cards and processors and things that they make.
Move up on Bed Bath and SPY.
I think NVIDIA investors, if we look at that chart again over the last 5 years, would take this chart and almost stack it up against any other company that there is. I mean, we talked about crude oil names being huge performers last year. Well, they struggled during the pandemic. That's why you saw that kind of outperformance last year. Names like Apple have done really well, but they didn't do that well leading into the pandemic. I mean, this is up there with one of the most impressive names in terms of stock price performance over the last 5 years of any, especially given its size. You're not talking about some micro cap company that's had some, you know, tenfold performance. You're talking about a company right now in real time that's almost $700 billion, one of the biggest chip makers in the entire planet, and just continues to click on all cylinders, and now just has this whole avenue that suddenly all the few of which there are not that many, let's be honest, there's probably like 10 companies bigger than this one, all of them decided at the same time they want to spend a ton of money on something that they make 80% of the market for. This is like a gold mine being discovered in 2023, and they own the gold mine.
I know, and like we heard from Amazon last week, Tesla, of course, last week, they're also getting into this AI movement. I mean, the news just continues to build. So no wonder we're seeing analysts really positive on this name, of course, because they have such a large addressable market right now to an area that is so hot overall. So definitely FOMO feeling to the upside. Alex, walk us through what you're thinking for an example trade, because I do think right now there is this pile-in effect in NVIDIA.
Yeah, and I think that we can't discount the fact that the stock's almost doubled, though. So I think that is something you have to take into account. Maybe mute your expectations.
Never watched it,
but that doesn't necessarily mean you want to do something that takes upside risk either, especially if you're bullish. So I looked at a strategy that will benefit the most if it moves slightly higher. But in the event that this thing just keeps roaring and is off to the races to the upside, it does not take any upside risk theoretically. So let's look at it. It's a call butterfly, but it's got a little bit of attitude. And so the best case scenario is a move to 290. How do you know that? Well, you look at the strikes. 290 is the short strike. So in any butterfly strategy in which you're selling the two center strikes, that's your best case scenario, is a move towards those strikes. And so in this one, we're buying one of the 280s, selling two of the 290s, and then buying one of the 295s to define that risk ultimately in the end. If the debit is $3, there is one break even for this strategy, and you find that by adding the $3 debit to the 280 call strike that you're buying. That's the biggest piece of this trade.
Like Asperger's is not autistic,
because it's the closest to being in the money. So that's the most expensive piece, and that's the one that we use when we add that debit to that to get the break even. So 283 is the break even, and the debit spent is the risk on this trade. And so if for some reason
moving up here,
NVIDIA never does rally, and this is the highs that we see at least over the life of this trade, and all of these options expire worthless, you would simply lose the debit spent on this trade. So that'd be $300 in risk. But if it does soar to the upside, and it does live up to its expectations that so many have for it, a move to 290, you could see this one expand to as much as $700 in profit. But in the event that it just roars through all of the strikes, this thing could basically level off for a max profit of $200. So no upside risk. You do give back some of those theoretical gains if it does go too high, but no risk to the upside, only risk to the downside, but it does need movement. Break-even's 283. Stock's not 283 right now. It's below that. You need something to happen for this one.
And a nice 3% move higher today, and we do not have earnings in NVIDIA until the end of May, so also some time before we get that next major catalyst in shares. But that does it for our FOMO segment. Now, coming up next, we will preview, I'd say, one of the biggest earnings events of the quarter. That is all things Netflix ahead of their earnings today after the closing bell. Caroline Woods will have the preview for us coming up next.
BBBY is doing good. It's consolidating day after 35% up the last 2 days. So this is exactly what you want. Good rip by end of day. Doesn't have to. GME not dropping. Yeah, GME has just been consolidating heavy for like a month. Buy the rip, sell the dip. Today's feel good. GMDA, this isn't dead. This moved to VWAP. What the heck? It's moved up 155%. Like 2 days. Now it's come down to VWAP. I don't consider that dead at all. I mean, it might be over with its run, but I'll move down to VWAP. Is jumping the gun on saying it's dead. Definitely need to get in and out on pumps and dumps. Let's go, Ricky Bobby. It's kind of implied in the name, I feel like.
Reaction to Netflix earnings. It's the, still the clear winner in the streaming space, but it has a lot to contend with. Increasingly aggressive competition, a saturated streaming market,
I don't know.
growth
Bed Bath might
challenges
not want
of
it
its
today.
own, management changes.
Not yet,
this
at
is
least.
the first earnings call without Reed Hastings.
Still chilling. Wait for 2 o'clock, see what happens.
It has its fair share of headwinds. That being said, it has already gained about 13% so far this year. As you said, it's up more than 100% from its 52-week lows, so it has staged a pretty impressive recovery. In terms of what analysts are actually expecting in terms of those headline numbers, EPS is expected to come in at $2.83. That's a significant decline from the year ago, $3.53. Meanwhile, revenue is expected to come in around $8.2 billion. That would be an increase of about 4%. So actually better than the previous quarter where they saw 2% increase in revenue. but a steep decline from the same period of 2022 when they saw 16% revenue growth if that $8.2 billion comes to fruition. Subscriber growth is, of course, key for Netflix. We know that Netflix ended 2022 by adding 7.66 million subscribers during Q4, ended the year with 230.75 million paid memberships worldwide. It's not expected to see that many subscribers in terms of growth, new subscribers in the first quarter. FactSet has an estimate of 1.38 million new memberships for the first quarter of 2023. But this will be the first time that Netflix reports results without a specific forecast for subscriber growth, other than it will be positive. Analysts, of course, will also be looking for updates on its ad-supported tier, how much that's boosting revenue and is expected to boost revenue and that subscriber growth figure. And then also the status of its crackdown on password sharing. This is something we've been talking a lot about, but we haven't really seen it come to fruition, at least here in the U.S. yet. So details on when they actually plan to do that, and just how many people have converted their memberships into paying for family members to share their passwords as well. So definitely a lot of question marks heading into this report, and a lot of excitement, but we're not seeing it reflected in the share price today. It's very much unchanged at this moment.
It's had a pretty impressive run, though, as well.
Might get a gap filled by close today.
Netflix certainly setting the pace for recovery. And look at Jenny's point. Literally a year ago at this time, losing 40% of its value in one day. Really, really impressive comeback. But, you know, I think that's also interesting, too.
You might fall out of a tree playing games like that.
Internet companies is inflated user counts. We have the exact opposite problem in Netflix. If anything, they have no idea how many people are actually watching because everyone's sharing their accounts. They're cracking down on that. And for this thought of mass exodus, if that Love is Blind reunion, I'm not sure if you're a fan or not. I know I was trying to watch it live, but you couldn't. There was outrage everywhere because there was too much demand for it at one time. That seems like a good problem for Netflix. Any final thoughts, though, before we let you go?
You know, it's interesting, Alex, that you say that, because we were talking about the Love is Blind reunion debacle yesterday, but then I was actually talking about it with one of our guests, David Barrs, who checks out today.
I broke out of that resistance there.
This is a company that's priced like a tech stock and plans to be a tech company and, you know, go into live sports. How big of a problem is the fact that they couldn't, you know, run a live stream of Love is Blind? It seems like it could actually have bigger implications for the company. He didn't think that was necessarily the case, but definitely raised some red flags on my end. That being said, in terms of the analyst community, I should say I didn't try to watch because I'm still stuck on like season 2, but I did try to start the first episode of season 4 yesterday because all the excitement, I wanted to be part of it. So TBD on the reunion, but. You know, the analyst commentary is, you know, calling for mixed results, potentially confusing results, just based on some of the guidance around that password crackdown. Goldman Sachs actually expects that Netflix subscriber numbers will come in line or slightly better than expected, but they still have a sell rating and a $230 price target. Wells Fargo says results will be less about quarterly results and more about the U.S. paid sharing implementation. Thinks EPS estimates could actually shoot higher if the company speaks bullish on the outlook for that password sharing crackdown. Citi results
that's not what they do.
Confusing, giving the early stages of the ad strategy, the slower than expected rollout of password sharing. Noticing a theme here, they're all talking about the same things, and price cuts in many of its minor markets. But they encourage investors not to overreact to results and really keep their eye on the prize. They have a buy rating and a $400 price target, so kind of all over the map. But heading into these results, analysts are very much split into buy and hold. 20 buy ratings, 20 hold ratings, and then 3 sell ratings. Median price target of 361. So still some upside according to the majority of analysts, but pretty split on this name. And we'll have to see if they're mixed and confusing. We'll be sorting it all out for everyone.
Yeah, Netflix is one of these polarizing names, Caroline, where I do feel like those dig their heels in and want to maintain their conviction, which I guess I respect, but I totally agree with you. If Love is Blind is crashing your streaming service, I mean, that is a big problem. I didn't even know really what it was until Alex just explained it to me. So that to me is so beyond.
Jenny.
I guess I have to do some research on my reality TV, but we will leave it there. Appreciate all of your thoughts. Ahead of Netflix's quarterly results from Caroline Woods. Now, coming up next, we'll look at
10 minutes to 2 o'clock.
Almost 99%,
2 p.m. margin calls, so
in nearly 13 years on some M&A activity. We'll discuss that more with George Tillis coming up next.
Bellis Health on some M&A chatter, huh? 98%. That ain't bad. The crime stock. No. It's a health company. Looks like they're gonna get acquired. Not sure. Bullish news. GME just broke below that trend. Don't think it'll stay down here that much. Yeah, 32 cents. I mean, that's basically, yeah, that's VWAP 32.05. So been trading around that all day. Nice consolidation. Still moving up here. Turka. Thanks, Austin. Yeah, we traded Turka. Kept an eye on it here and there. It's in a nice uptrend. I don't know if it'll have a big breakout move or not. So yeah, it looks good to me. Bullish. Yesterday you've got a, is that? Not quite an engulfing candle, but I like the bullish MACD on the daily. If you're green over the 9. But definitely making higher lows. Your highs are a bit spiky, but was that one big day? I think that was Zip Trader. I don't know what that was. Yeah, I was in this. I jumped out, but yeah, I need volume. Looks good if you're down to hold it. I might not be liking the break. I don't like hanging out above 414. Big old S3 for a shelf offering. Definitely got to be careful for offerings. What does it mean? It means the IV has gotten super low on GME, which it has. And just more signs that the stock has been fixed. Yeah, I think it'll fill it. But I guess I'm more confident of just 1940. I'd like to see what happens there, because it very well could bounce on 1940. That was such a big level. But if we get there, then yeah, it's possible we fill that gap. That being said, I mean, we keep kind of holding up. Held this support for a while. It's 22.16. 1, 2, 3, kind of 4, even 5. 5 bounces on it in the last couple months since earnings. And only broke down like here, but it actually just ended up wicking. And then now today. But today's been actually finding this downtrend channel that we've tested as resistance 3 times. You can just find that as support once, and now today kind of found it twice, but starting to break down. Well, it's really just right at it now, so even if it does continue to find this as support, it's still a downtrend. So we saw it break out of the upside channel, which got me bullish. Now it's breaking back down to support. We'll see if it breaks back into the channel. But more simple TA would show it's bearish. Bearish MACD, right under the 9 moving average. Just have like kind of this last support really here. It's horizontal support, 2181 or so, where it's basically at right now. That gas back to today's highs. Wow. 5 flushing down here. SMX just holding up at these levels. Fixed or taken care of. Either or both. VY coming down below VWAP. 3193. If we test the 30-cent range again. Fixed as in not a big problem that has cyclical price action of 100+% in just a matter of a few days. Fixed as in it was broken before, since we started trading it. Giving us predictable price action. Pretty big rejection there on SPY. They're just consolidating around VWAP today. Interesting. Bed Bath moved down with that SPY move too. Finished? No, not really. You sell off like yesterday this time? Good entry. On BBY like this? It's more about like supports to me and where it stops selling off. So just seeing a sell-off to me isn't a signal for me to want to buy. So if we see a sell-off and then it starts to flatten out around this gap fill for 28 cents, then that would be like, all right, maybe start picking some up there, or even 27 cents, kind of that resistance support from yesterday. But I'm still looking at that for like 30 cents here. It moves down here and starts slowing down, picking some more up here at 30 cents. 31 cents. Can't see the pole because there's a gap up, but really this is kind of a bull flag. Here's the pole. Chat consolidation, trading tighter and tighter. 30 cents, yeah. Yeah, we can see that today. That gas, new high there? Yeah, wow. Overtraded the futures today.
Goldman, these shares are lower now as earnings did beat expectations. It was revenues that were off, and CEO David Solomon says that the company is exploring a sale of its Green Sky consumer unit, which makes sense as companies seek to be more efficient because Goldman Sachs is an investment bank at best. And we'll see just how the consumer unit did perform. But right now, let's take a look at the numbers. Adjusted earnings per share came in above expectations at $8.79, right? But revenue was $12.22 billion, below the Zacks estimate, and however, it was above some other estimates, but just as we said right here, below the Zacks estimate. Now, the company attributes that to a loan portfolio adjustment for its Marcus unit, and it was a contraction of about 5.5% in the revenue from the last year that it reported in that area. Now, net interest income was at $1.78 billion. That was lower than a year ago, but the company allocated less for credit losses. It contracted by $171 million versus the year ago period. And on the performance of this stock, year to date, it's down more than 2%. However, nearly 2% higher from last year this time. And so we'll just see how it shakes out after this earnings session is digested by investors.
Yeah, without a doubt. I mean, profits was falling. They had sluggish deals, fixed income trading, not so great. They had the Marcus loss. So a lot of things and tough comps year over year for some of these bank stocks. But right now, down 1.2%. And Bank of America, folks, has turned into the green. I think that's also worth noting after having been under pressure this morning. We'll turn our attention away from banks and over to the home builders. We've gotten in some home building news this morning, permits and starts.
317
what are you watching
support.
There?
I'm looking at home builders.
Yeah,
permits
thereabouts.
and starts were better than expected. That came in from March earlier
where we
today.
are right now.
And as a result, home builders are higher. You can see that starts came in at 1.42 million. That was above estimates, but slightly lower than the year prior. And then permits were at 1.30, 50, 1 million, 1.43 billion, pardon me. And that was above the estimate there as well. And just yesterday, home builder sentiment, that index rose for the 4th month in a row. And you can thank lower interest rates on homes, sparking more of an interest in the housing market from the past few months. And that's why we likely see Pulte Group up, hitting a 52-week high today on that sentiment.
Looks like we'll get a move down here,
up around 3%,
at least to the 30-cent range, and maybe start filling that gap even.
So we'll get a little bit
got the momentum, got the MACD, about the right time of day for a little sell-off maybe. A little late actually, we'll see.
But analysts are expecting earnings on Pulte Group of $1.78 per $1.78 per share, and that would mark a year-over-year decline, however, of 2.73%. Meanwhile, the Zacks consensus estimate for revenue is projecting a net sales of about $3.27 billion. That'll be up close to 2% from the year ago period. And some of its home builder peers are higher today. D.R. Horton is up, so is Lennar and KB Home. Even Home Depot and Lowe's are a little bit higher today.
All right, thank you for all of that. Good to see you. Thanks, Renita. Now let's take a look at the bigger picture. Jeff Schwaber's with us, CEO of Blue Rock Capital Markets. So you're not expecting some near-term breakout for the markets. In fact, we're not too far off the intraday highs of this year for the S&P 500. Where do you stand?
Yeah, you're right. I think we're dangling on a bit of a precipice, but I have seen a lot of sideways movement. And when you look at the three major equity indices, Nicole, it's sort of a tale of three cities. You're right. The S&P, I think the high was 4,800. We're sitting here at 4,100. So we're down, call it 15%. Dow is within 10 points. I think 37 was the high. We're at 34. So it's like 8-ish. And the NASDAQ, obviously the tech heavy, more volatile one is down about 25%. So on the equity side, it's a stock picker's market, but we're faced with the fundamental principle that corporate America fuels itself with equity or debt. Equities being down, everybody's pretty loath to issue stock here. It's dilutive. You have to issue a lot more stock for the same equity capitalization. And on the credit side, obviously, the debt service is substantially higher, which affects earnings and debt to equity and interest coverage ratios. So, we're floating a little bit and moving sideways.
Understood. At this point, though, what's interesting is we look at the VIX, right? Down below 20, 17, 18. What did you think about that?
Yeah, I was surprised, frankly. I mean, I think for the past 3-4 months, we had increased volatility. I think everybody heard ad nauseum about a disrupted supply chain and the Ukraine crisis and rising interest rates and inflation. And, to me, everyone's looking for a conservative equity-like return. I don't think anybody has the stomach to lose 12 to 20 again in the classic 60-40 portfolio. 10 years here fluxing between like 3.25% and 4%. And if that's considered the riskless rate, call it 3.5 or 4, there are plenty of places to get a 150 to 250 basis point premium over and above that. But if you want, 8 to 10 points and you want to incur equity risk, you have to think, I think, outside the box. And at Blue Rock right now, we're favoring private institutional real estate and some structured credit products that we believe have asymmetric risk return dynamics in this present economy.
Yeah, it sounds like you're looking for alternative investments, right? So are you saying that with the S&P up 8% and the NASDAQ up 20%, you should maybe take money off the table and put it into something else? Could you be more specific how someone should orchestrate a portfolio or what they should be doing right now?
Yeah, certainly. I would say maybe paring back and just, slicing the pie up between equities, fixed income. I mean, there's institutional grade, investment grade munis, AA's plus yielding, 4 or 5% right now, taxable equivalent 7-8. I don't think anybody would balk at that. But yeah, so on the structured credit side, aside from just classic vehicles, I think people chase yield in some ETFs that are levered, and the yield looks great, but in a rising rate environment, they lose 20 or 30%. It's exacerbated on the principal side. And there are senior secured structured credit products, generally known as collateralized loan obligations. I think 70% of all senior secured loans are held within CLOs. You're at the top of a capital stack and you literally have a first lien claim on the company's assets, their cash, their property, plant, receivables, everything. And the equity piece of those for 15 years has distributed about 15% to the investor. I mean, where else can you get a mid-teens return at the top of the stack and, in that favorable position? So something you probably want to talk to a financial advisor about or do a little bit more research. But we see some great risk return dynamics in those vehicles right now.
Yeah, and it's hard to actually find sometimes the alternative assets to invest in. As you said, talk to your financial advisor. You talked about the real estate fund as well. That was something you were looking closely at, right?
Yeah. So real estate, if you look on the private institutional side, there's sort of a dream team of these elite managers. It's BlackRock's famed Granite Fund and Morgan Stanley Prime Property, like a $40 billion fund, highly institutional in nature. We run the largest real estate interval fund, Blue Rock Total Income Plus, 10 years of positive returns, very stable fund. And what happened, it had its first little pullback because of rising rates, because the cap rates of institutional real estate were around 4%, then 10-year treasuries were 1 or 2, and then 10-year treasuries came up to 4. So you have to maintain a risk premium, a reward premium for owning something with more risk than the riskless, the 10-year paper. So there was a bit of a decompression. And it's interesting, if you go all the way back to 78, there's been about 9 rising rate and inflationary periods. And in 9 of 9, with no deviation, there is an approximate 20 to 50% upside over the long-term 9 or 10% return for real estate. So it returns about 12 to 14%. coming out of a rising rate cycle for a 3 to 5 year period. And it does it with a standard deviation sub 2. So whenever you can get that much of a Sharpe ratio, a very low volatility dynamic with a mid-teens return generating income and tax efficiency, that gets a slice of the pie.
And when would you be more comfortable to say to get back into stocks at this point now? I know we're still, even though we've run up this year, we're still off highs, right? I mean, you had noted NASDAQ 16,000, right? You know, how about Bitcoin, something like that? Are you a fan of crypto at all? Because that's above 30,000 now.
I'm a student of crypto, Nicole, but I'm not a man of crypto. I probably have 1,000 hours of studying into it. I'm still not sure I understand the trading dynamics. It's way too binary for me. Something that can go from 30,000 to 12,000 and back to 30 is, it is great. But I think that there are safer and more stable and understandable ways to make money, especially for the mass audience that's probably chimed in today. But with regard to the markets, definitely a selective stock pickers market. Right now, I think blue chips will rule. I think that for the most part, I think that there are some tech names. We've already had a huge bounce back in Meta. I actually was on Liz Clayman's show just a couple weeks ago when it was sub 100 and said it's a $500 stock masquerading around at $100. Now it's at 220. So some of those are definitely going to have growth curves, but watch out for PEG ratio. Watch out for too high of a growth rate relative to the multiple that you're receiving, because I think those are the ones that are going to be under attack. If you polled 100 investors right now and asked, are we getting ready to test up against the new highs, the old highs in the Dow and the S&P, et cetera, and technically break out, I think 98% would say no. So we talked about them being down 10, 15, or 25%. That's generally the upside for a resistance test. So I think you do have to be a little selective and maybe trade, and then as we have logical corrections, float back in on a higher weighted percentage.
All right, Jeff, thank you so much. Good to see you. Jeff Schwaber, CEO of Blue Rock Capital Markets. Thanks. Later this hour, energy earnings just around the corner. We'll have a preview of some of the biggest energy names ahead. And we will examine the adoption of gig workers in today's economy, everything you need to know. Our panel will preview the Netflix earnings that are due out. Are you ready for that report? And it's Technical Tuesday. We'll take a look at a chart of Intel, find out why it's on the technicians' radar, what caught their eye. Stay with us.
Let's walk through charts, one of the most commonly used features on thinkorswim. Start by going to the Charts tab and entering a ticker symbol. Select time frame to adjust the time intervals or to favorite a time frame. Select style to change the appearance of the chart. You can add drawings by selecting Drawings, Drawing Tools, and then Type of Drawing. For symbol comparisons, select Studies. This also gives you access to hundreds of pre-built studies, including a number of classic patterns. The grid icon lets you view multiple charts at once. You can even initiate a trade from the Charts tab. Just right-click anywhere on the chart and select either buy or sell. For more demos on how to thinkorswim, head to the Education Center on tdameritrade.com.
When traders tell us how to make thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. thinkorswim Trading from TD Ameritrade.
It's a 13-hour flight. That's not a weekend trip.
15 minutes.
Oh, wow, I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Hey, thanks.
We'll see ya. They're getting so smart.
Choose the app that fits your investing style.
Welcome back to the Watch List. I'm Nicole Penelides, live on the floor of the New York Stock Exchange to look at some of the movers for you here. Bank of America has had some back and forth action after reporting an earnings beat on the top and bottom line. The bank saw a 25% increase in net interest income, a 21% rise in consumer banking revenue, and the company's CFO expects a headcount reduction of 3,000 by the end of the second quarter. Bank of America right now is at 30.46, up 1/3 of 1%. Johnson & Johnson, less down today. The healthcare giant reported better than expected numbers, higher guidance, and boosting the dividend. However, the company's continued legal issues from the talc powders account for about $6.9 billion charge. Microsoft mostly muted after a pair of price target hikes today. Jefferies lifted Microsoft to $320, up from $310. TD Cowen raised the price target to $300, up from $285. Both analysts highlight the company's Azure unit. Jefferies says its AI uplift is likely overestimated near term and underappreciated in long term. And then there's NVIDIA, 52-week highs there. Company double upgraded over at HSBC to a buy from reduce, and new price target $355, up from $175. The analyst says AI opportunity more than offsets previous concerns over data center slowdown and admitted being too cautious on NVIDIA in the past. NVIDIA shares up nearly 90% this year. And we check out Bitcoin, 30,110, up 2%. It's Technical Tuesday. Let's welcome in Kevin Horner, Senior Manager, Trading Services Education at Charles Schwab. Good to see you. Thanks for being with us. So, I mean, we're right near the top of 2023 on an intraday chart on the S&P 500. I mean, of course, there's plenty of people who use that old phrase, sell in May and go away. If they were to do that, they'd have on the S&P an 8% gain, a 20% gain on the NASDAQ. What are you thinking when you look at the S&P chart?
Well, you know, the whole idea behind sell in May and go away implies, of course, you're going to find the right opportunity to put that money back to work later on in the year. Which of course
double
means you have to
topping
be right
maybe.
more than once. So for those of you maybe thinking in the longer run, I'm not a
BBY
huge
just
fan
showing
of
a lot
the
of
idea
resilience.
that you just kind of close up shop come May. That said, what I find pretty interesting about the market right now is, if nothing else, we've got a level around which we can base our decisioning here. We're pretty much rangy between 4,070, the lows we've established over the last 2-3 weeks here now, up to the peak we made in February, which was
daily
intraday
volume 207 million so far.
February 2nd. And really, until we break either of those levels below 4,070 or above 4,200 on the upside, I think we're going to continue to see traders more or less sitting on their hands. I don't know if you've noted, but volatility has more or less exited the market almost entirely here, and we're just continuing to drift. So outside of moves that take us through either of those two levels, Nicole, I think like a lot of traders are probably
the momentum's
simply
to the
sitting
downside
on
on the
our
shorter
hands and
term.
waiting for something
Got a little
to
bear
occur.
flag. We're under VWAP.
We'll have to
Red
wait and see
maybe
what the
bearish
Fed
MACD.
does and all these earnings.
Keep showing support.
Let's get to the stock market
But we're
here,
right
and
at the
you're
support,
looking at
so.
specific stocks, I should say. Intel. Why is this one jumping out
Momentum's to
on
the
traders'
downside.
radars?
Well, of course, Intel had a
Seemingly
atrocious
will
2022.
come
It was
lower.
really brutal. Losing, they were down nearly 60% at lows. But what's most interesting about what's happening at this point is that you've had a consolidation window after all of that selling. That really began in September of 22, and we stuck to a range between $25 and $31. So about a $6 range here from September all the way into late March of this year, in fact. So it was just this last month where at the end of their investor period, they had the event in the end of March, and you see this excellent flagpole developing from about March 28th or so, and we basically rallied for about a week to week and a half, creating now the cloth portion of this flag. So it has retreated off of highs about 35% of the entirety of the move. perfectly within reason, totally appropriate from the technical analysis viewpoint. You want to see giving up about a third of any move you make to the upside in a flagpole like this. You could even give up about half of that move and still be in this bullish flag formation. So a couple of things that stand out. One, we've broken a range of $6, meaning if we believe in the range, we could take $6, add that to the range on the upside. That's one way shorter term traders might look at this. Gives them a target of around 37, which takes you back to a big move we had lower in August of last year. That was a big gap ledge. So if you find yourself back into the range, though, Nicole, under 31 again, and maybe under the 200-day moving average, that's where things would really change. So it leans more bullish in nature now because of the price action of the last 2 to 3 weeks. But if it got back below that first green line at 31, things would change quite dramatically and rather quickly, I would think.
Yeah, people love it in the last 6 months. I mean, when you say up 23%, or we look at some of these other names in the group that are getting positive comments, like we had NVIDIA today. But thank you for that. We're going to watch that closely on that chart. We saw that little tick up. How about our next one, Vir Biotech? VIR is the ticker symbol. Your thoughts there?
Not one that normally would make my watch list, if I'm being honest, but biotech as well as healthcare in general, healthcare as a collective sector has had a really great month, up about 7.5%, year to date up nearly 5%. And what I find interesting here is that we are in another one of those scenarios where a move one direction or another is going to dictate the trade for most traders, meaning you can have a neutral stance at this point and not decide to take a trade until you get a break one way or the other. So that green line we see moving through the chart here, that's the 200-day moving average. And we are right at it today after moving off of about $22. So what I like about this chart, and I think is really interesting, is there are various levels from horizontal support and resistance that can offer traders both directions.
Yeah, a little bear flag on 5 minute.
The trade they're considering. So moves through 25 to the upside may allow bulls to target the top range, which would be fantastic. 31. I mean, from 25 to 31, a 6-point move, better than 20%. Really great from a risk reward standpoint. So allowing the trade to the position to close over the 200-day moving average in 25 makes a lot of sense. Now, it's notable, though, we've not been able to do it. So we've got 4 days of our highs coming all very close to one another here at 25, and it could present as a rejection instead. And if it rejects
not necessarily, so
well, then the bears are thinking, I've
flag
got an
pull
opportunity
and
to target
then
the
consolidation.
bottom of the range we just saw.
Usually you can keep trading the same direction.
Month, it's been rallying
so the direction is to the downside on the pull and then consolidation. So basically it's sold off, now it's consolidating.
Level, a 200-day moving
so
average.
the momentum would tell you it's
through. You might expect
it's going to break out to the downside, not the upside.
What I like about this, Nicole, is just simply put, there is no lean. It's very neutral at this moment. It could go either way, and traders of either side can simply apply it to a watch list and say, show me what to do next by virtue of the price action.
Wow, thank you for all of that. We love having you on every Tuesday, Technical Tuesdays. Kevin Horner, good to see you. Thank you. Senior Manager, Trading Services Education, Charles Schwab. Thank you. Coming up next, we will dive into the energy sector. The team from Mizuho has a preview ahead of the earnings, and we want to learn what they think about names like ExxonMobil, Chevron, Valero, any other ones they might want to bring to our attention coming up.
Sold at 33. We were just talking about a shorter time frame, Julian, the 5 minute candles here. Longer time frames in a bull flag. Get this move up, consolidation. So yeah, that's bull flag. Real short term though, just in these 5-minute candles. Kind of a bear flag and below VWAP. But it continues to show support. Fly up above that level again. There you go, showing support. Above VWAP now. Hello, Blue Bubby. And back below VWAP.
Particularly, the first quarter is a quarter where most refiners are in turnaround. They are, maintaining their equipment, their refineries. They're getting ready for the summer driving season. Most of the catch-ups, they discussed how that led to lower gross margins for them. Valero was an exception. They actually were talking about how, despite the turnarounds that they did, they continue to drive better margin capture, better control of their profits.
I like a double doji on the daily.
Commodity prices. That sets up pretty well for the rest of this year for this company as well, because physical markets for gasoline, for distillates, for anything, any refined product really, are quite tight right now heading into driving season. So that means the profitability should be higher. You have no real big spending in terms of capacity expansions, which ultimately leads to higher free cash flows.
Right, understood. So when you look at names like, because we're waiting on earnings season, right? So we're waiting on Valero, Exxon, and Chevron, which both report next Friday. What's the theme? You think we'll be saying a lot of good things on these earnings reports? I mean, we know that the administration certainly looks at these with a microscope of what kind of money they're making and, putting money back into the businesses rather than a few other things. What do you think about what kind of earnings we'll see from these names and our takeaway from the group?
So I think in terms of earnings, the weakness in commodity prices that was in the first quarter is already reflected in street estimates or is getting there. So there won't be any surprises or any big surprises in my view, particularly on names like Exxon and Chevron.
The doji's there.
In terms of the rest of the operating year, they're price takers. They can reinvest more, but I don't think they're going to deviate from their capital plans as they have disclosed them. In Chevron's case at the March Analyst Day, in Exxon's case late last year. These companies don't don't tend to change their capital spending in short term. They think in terms of 3, 4, 5 years. There's some things that they can control, but not a lot. And I think that's going to be the case. You know, the administration certainly has been viewing the profits for these companies with the microscope, but investors have asked energy companies to reduce reinvestment rates, reduce the amount of spending for growth's sake. That's a message that these companies have taken to heart. They're focusing on buybacks, dividends, paying their investors. That's who controls the companies. And so I think they're going to continue to do that even if commodity prices are slightly higher.
Right, understood. And what do you think about in the big picture? I mean, I know we're trying to be more environmentally friendly. We're watching a very low dollar. Some of the other elements, I mean, you still have the Russian-Ukraine tensions, war underway. What are some of the other factors that could really come into this group?
So, you know, a few things there to unpack, but, you know, when you think about energy transition, what we have said here, and we truly believe this, is the larger companies like Exxon, Chevron have a role to play. Oxy, you know, they have a role to play in that, and they're the ones who are going to house the scalable technologies, and we're seeing that, right? Exxon and Chevron have committed quite a significant, you know, tens of billions of dollars of capital to test the technologies to make sure they're commercial. The government has done its part.
There's a pop-up of VWAP on BBY.
You know, help incubate those
Continues
processes.
to define
but getting to scale requires engineering, financial capability, project execution, all the things that these companies already house. Now, with respect to you know, just longer term supply, because of some of the concerns
now.
Energy transition, but also just, as I said earlier, capital discipline, we haven't seen a lot of exploration dollars being spent by both in shale and across the globe. So you don't have a lot of reserves that are out there that are undeveloped at this point. So we think that energy transition is going to be a process.
211 million.
You know, one day we're not going to wake up and have all electric vehicles.
If we do get a break here, we're going to get big volume increase probably,
etc. It's going to take time. And to do that, you have to have a balance between sort of, you know, oil and gas.
Well, double doji is like there's no
in green technology.
Double doji could be a sign of reversal.
That's what we're seeing right now from the majors and the guys who have the scale to do it.
We've already had the reversal, so you wouldn't want it here. You'd want it maybe yesterday.
Right now, at you know, almost $81.
Just showing that buyers and sellers are
people say,
exhausted on both sides. They don't know which way to go.
Where do you think it's headed in 6 months, let's say?
We're constructive. We think it could go higher.
So it could be a sign of reversal, but the fact we've already bounced off the bottom, I'm not sure if I'd like a double doji.
Refilled, although, you know, that is a policy decision. Also, you know, the OPEC move recently, I think that there is more upside to oil prices from here. We don't think that it's going to hit the levels we saw last year, you know,
doji star, so like a shooting star.
Certainly in the, you know, mid to high 80s, even $90 oil is not unreasonable, particularly as OPEC is controlling the supply side of things, right? So if demand is weaker than we expect because of any sort of recession or economic slowdown, I think OPEC steps in again. And so they're kind of managing
it's
the
a double
oil price
doji, a doji star, same thing.
I think that keeps us in that band of sort of $85 to $95.
There's the double doji, so it's it could be a sign of reversal.
Kumar, thanks for being on the show today and really giving us a preview of some of these energy names that we're watching very closely.
But it doesn't mean a whole lot, honestly, just one candle in itself.
Thank you.
Sometimes you get those during continuations.
Still ahead in the second half of our show,
here you get a rally and then kind of a double doji and then rally and double doji. So it's
what does this mean? The growth outlook for this
just one
space
candle is a
overall?
huge deal.
Find out what our next guest thinks. And has
SMX 20%.
Some losers in the S&P 500.
Broke it. Broke the high of the day. %. All right, 2774. Yeah, a lot of indicators look bullish on it though on the longer time frame on Bed Bath. Just what I have in mind. All that was needed. I might short this thing at one of these levels up here. Hearing cancel hearing. Is that still going on? With all that BY, looks like it wants to go, and then up. Ends up just more consolidation. Some more consolidation on BBY. Missed SMX making a new high. Oh. Missed SPY double topping again.
Data that we saw, GDP overnight, and you know, interestingly enough, kind of a sort of a mixed reaction. I guess
thanks for doing the hard work, Dink.
In terms of the reaction to crude, which I was surprised. I mean, look at these numbers. Quarter over quarter, we're talking at 2.2%, in line with estimates, but well above the prior levels. Look at the year over year. It came in about 0.5% above estimates, and we're talking about 1.6% above prior level. GDP year to date at 4.5%, well above prior at 3%. So you see the sharp increase there. And you know, I was reminded of comments that the IEA recently said. They were talking about demand being driven by China, right, for crude oil. And so ultimately, there's proof positive of demand, ultimately an economy that's recovering. But yet, look at crude oil. I mean, here's the price activity we're seeing to begin the week. As we've come off the highs around 82.20 yesterday. Keep in mind, last week we're up around 83.53, but you've got the EIA calling for U.S. production to hit a record high in May. I think that's a big part of the bearishness we're seeing today, down to 79.91. And then, as I mentioned, much like the indices, kind of mixed, back up to 81.50, hanging out just below 81 right now. Concerns of weakening global demand in this higher rate environment, but I think that OPEC production cut ultimately is what got, well, take a look, that run up that we saw. I mean, we spiked from 64 in the end of March all the way up to near 84, and that's going to start to impact some of those inflation expectations. Here you can see crude oil holding up above the 50-day moving average. You've also been watching prices at the pump on the rise in coal. You know, I keep a close eye on that. Today we're at 367 for the national average for a gallon gas, according to AAA. A week ago, 360. A month ago, 344. I mean, you see the trend.
Understood. I'm glad you showed us that. Thank you. We see that pop there. Thanks. Okay. When we look over to crude oil and copper, what else jumps out at you?
Copper really is just a market that seems to be waiting for more information, which I think is kind of reflective of the indices, although we're sort of drifting towards the upper extreme of the range that we've been in basically since, well, this time last year. I mean, May of last year, we've got the high from August up around 4,300 in the SPX. You got the lows around 35, and yeah, near 4,200 right now, but still not necessarily breaking out. Speaking of not breaking out, look at copper. I mean, here's the high from last year, $5, and down to $3. I mean, the math is pretty easy right here at 4, hovering around the 50-day moving average here. Not a lot of conviction. So those numbers out of the UK, I'm sorry, I said the UK, I meant China in terms of GDP, not really tipping the scales one way or the other, nor has what we've seen from the other data, or again, so still sort of waiting for more information here. But I think one could argue copper faring pretty well in a higher rate environment, much like what we've seen for stocks. And this doesn't really indicate necessarily recession at this point, but let's keep an eye on what's happening here as we kind of teeter around the 50-day moving average. But copper faring pretty well amidst all of this, one could argue. Maybe you could chalk it up to support from the U.S. dollar weakening.
All right, Ben, thank you for all of that. Appreciate it. Thank you. Okay, joining us now, I want to turn our attention to the gig economy. We know there's been some court rulings. We've been watching what goes on with Uber and Lyft in California. The labor market. Alex Atwood, CEO of Gravy Work, is with us. We've had this get back to the office, hybrid models. What are you watching when we get some mixed results around the economy? What are you thinking?
Well, first of all, the gig economy itself, I've been in the staffing industry for almost 3 decades, and the gig economy used to be really just staffing agencies and the temporary labor marketplace, right? And so in the last 25 years,
and particularly
the last 5 years, things have just evolved drastically. So companies are now leveraging have always leveraged staffing agencies to fill gaps and short-term projects and provide flexibility in their workforce. But the perspective on temp jobs were just that. They're temp. And if you're into finding something full-time or permanent, that's sort of the entree, right? But in the past 4 to 5 years, it's completely flipped on its head. Technology has enabled gig marketplaces now, which gives 100% flexibility and transparency to both the employer and the employee or contractor. Right? So it's a completely different ecosystem than it used to be. I looked at some numbers, and prior to the pandemic, there was 57.3 million U.S. workers in the gig economy. In 2022, there's 73.3 million workers now in the gig economy. That's up 36% just since the pandemic, and it's expected to go to 76.4 in 2024. So it's really something else. So in terms of how to stay competitive in the job market, companies really need to adapt to the evolving gig economy and create a workplace that supports these various work styles, because that's what's happened. The gig economy has enabled, and the pandemic in a lot of ways has had people discover that there's just so much flexibility available out there, right? Mm-hmm. So it doesn't work for all companies. Some people are discovering, however, that they enjoy the human connection, the creativity, the camaraderie that develops in person. But it's really up to the company to decide the best option for their particular team and industry.
Right. Right. You know, and when we think, you talk about how it's evolved and how it's changed from what used to just be temping and staffing. And now, I mean, a lot of times with the gig economy, people are working long hours, but they still have the flexibility to really pump it out in 1 week or maybe take a step back the following week. I mean, I even know one trader here on the floor who now is working a lot of remote and even drives an Uber. So, there's pros and cons to being able to do that. But as far as a worker or as far as a company, which one do you like seeing going one way or the other? Do you like what you're seeing with the rulings? Some of the workers didn't want to have some of the things that were being pushed for. I mean, it sort of went back and forth.
Yeah, I mean, it's still, a big gray area in terms of, how to employ these folks, right? But at the end of the day, I mean, things have shifted dramatically. Companies like Target now are gigifying the way that they schedule their part-time workers. Companies are actually evolving their internal ecosystems to be more variable, to allow for more flexibility. And like you said, people now enjoy the ability to be able to make money when they are, on the weekends, or when they want to, make more money for Christmas or anything like that. But on top of that, now you have access to this ecosystem of contractors and freelancers and really talented people. And when you're looking at an economy now that could potentially be going into a recession, companies are thinking twice about whether they want to hire full-time employees, right? So it's really shifting in so many different ways. I think ultimately, the silver lining in this is that we've opened up and expanded the way that people work, the variety, the way that people hire, the way you can bring more freelance talent in for specific projects. And frankly, the way that industries are moving now, the speed, the pace that they're moving in, it just requires a new adaptable way of work. And so companies are going to be adapting to that.
Yeah, well, I'd like to know what you know for sure. I mean, because you said, companies need to adapt. So it sounds like you know that for sure.
Yeah.
At the same time, look, there's a battle to get people back in the office, and there are some people who
big flush on SPY there.
get to work every single day, and there's the others who are in their sweatpants with their dogs. There's got to be a real disconnect, and it's not necessarily a happy thing for everybody.
Whoa, getting
the
bigger.
second thing is a lot of people who are doing a lot of freelance work, they are not getting benefits, 401ks matching, they're not getting vested stock interest, all that kind of stuff. And that's problematic, particularly
Fed speakers
for people
today, Bowman.
who don't necessarily make that much and
Started
probably
speaking at
could
1.
use some retirement savings. Do you think people should be getting back to work a little more in person? And what are some of the other things that you say, I know for sure, being someone who has some experience?
Yeah, I know there's a lot of companies, including Mind Gravy Work, that are looking at ways to be able to provide health care, to be able to provide support, and to be able to do things in terms of potentially retirement plans for gig workers. But it's very difficult, right? Because the whole nature of that type of work is that there's somewhat of a lack of commitment from the worker, right? So I think from what I've seen in terms of colleagues in the industry trying to kind of close that gap, where the freelancers and the gig workers can also find the same support that full-time employees find. There's different types of products that are being developed now. There's something called the Healthcare Alliance, which is providing free healthcare to gig workers. There's all sorts of different products that are coming up now, that are available. So I think we're going to find a solution to this. The ruling in California there in terms of going with the 1099 classification for Uber drivers, I think is huge. Frankly, I think the gig economy now is so large and our economy depends so much on it that it's going to be difficult to try and drastically change the way that a good amount of these people are employed. But I think we have, we have a lot of great minds around this. We have a lot of technologists around this that are finding ways to solve these problems, right? And healthcare in general, there's just so much that needs to be done just in that sector alone to be able to accommodate, right? So this is just another a little bit more complicated, but it's just another thing that we get to solve being in this industry.
All right. Thank you so much, Alex. Good conversation. I appreciate it.
Absolutely. Great talking with you, Brooke.
CEO, Gravy Work. Thank you, Alex. Still ahead, we'll bring in our panel to discuss Netflix. Watching Netflix? Well, the streaming giant reports its earnings later today. What kind of subscriber growth will we see? What kind of competition has been nipping at the heels? All the details coming up.
That was a pretty big flush there on SPY. Not sure. Still don't see any news. Must be from Bowman talking or something. $147 billion of taxpayer money was wasted in the U.S. in 2022. Bowman said at 150 we're watching very closely for potential signs of more bank stress. Opendoor lays off 22% of staff. There you go. You got your flush on GME there. That SPY drop. Now GameStop's back in the channel. See if it bounces on this trend line down here. On the 20 range. Or if it just flushes to 1940. Probably not going to flush. I like the downside exposure on SPY, especially for SLD. This RSI divergence on the hourly. On that double top would have been nice. And just so pretty choppy today though. Not a great trade. Bed Bath creeping back up to its high range, 33 cents. It's at 32.76. Up 10 minutes to CNS close. Awa. Might cannot be wasted. I'm not sure what that means exactly.
Biggies we love to
like
watch.
Maybe
Netflix,
unclaimed
Netflix.
returns or something.
So ahead of the earnings,
I don't know.
Our panel ready. Doug Astrop is with us, managing partner, Exponential Investment Partners, and Kenneth Seuss with us, Chief Strategy Officer at Tremor International. All right, Doug, I'll start with you. What are you watching?
Yeah, it's great to be here. The streaming business has really been interesting to watch over the years because Netflix came in and was the pioneer. They really created the space.
I did not match that face with that voice.
And the goal was just to attract subscribers at any cost, really. They spent a lot of money on content. And now they've got a lot of competition. Disney's come in, HBO Max, Paramount Plus, Peacock, so it's gotten fiercely competitive. And also the economics have changed and companies are trying to focus more on profitability. A lot of it came out of last year, stock prices getting beat up and recession fears. So now it's kind of more about making money, not just capturing the eyeballs. So Netflix is going to have a tougher time going forward, we think. They're definitely the market leader. They're the one to beat, but they've got a lot more competition
your new view
now.
on the world since you've
And some of these
taken a look at it
upstarts like HBO Max
has given you a fresh taste
they
on
can make big
comedy.
strides off of a smaller base and start catching up to Netflix versus Netflix trying to grow
wicking down
this
there.
massive
Wicking a bounce, 413.15.
audience that they have and take it up from there. So we would actually look at some of these other names ahead of Netflix. Netflix is, they're ripe to disappoint at times and get punished for it. So that's what you got to watch out with for Netflix.
And as you said, there's other names. There are headwinds, more on the password crackdown.
XXII,
In fact, some
I
of the
finally found a bottom.
analysts think that will help subscriber
Bouncing
growth
now.
because now, all your friends can't share your password. They have to get their own. You have the ad tier. That's another level. Kenneth, what are you watching? And subscriber numbers, what do you see for Netflix?
Yeah, we're looking at that ad tier growth. We're really looking to see
I like
if
this one
that's
for
gonna
long.
take off. I think from our
XXII,
perspective, we're
looks
seeing
good.
generally in the industry improved user experience around ads when it comes to connected television. Certainly something we see from the Tremor side here. So we are seeing that improvement in user experience, and I think that will help them grow their user base of ad tier customers. We think that'll continue with some of the other competitors that we saw on screen as well. So they're just getting started, in our opinion. We think they've got a good product. They're starting to get more subscribers on board. Advertisers are very interested in getting their message out to the Netflix consumer.
So at this point now, Doug, are you implying that Netflix is not your favorite? They've already made their footprint and that you like some of the other names more? Or do you still like Netflix as a buy per se? You also brought to our attention names like Comcast and Warner Brothers, Discovery. Which ones are best bets for investors?
Yeah, we definitely like Netflix. It's just, it's kind of more of a hold than a buy, we would say. We could kind of characterize it that way. But Comcast is really inexpensive. and they've got a really diversified business. They're selling for a 10 PE, and it's a very safe stock. It's a slow growth stock, but they've got a great business with the broadband penetration. I mean, in their coverage area, they've got 67% of the broadband audience. So you've got this kind of utility, which is really a vital utility for people. And then you couple that with theme parks and a movie studio, and it looks a lot like Disney, but it's selling at a fraction of what Disney's selling for. And then HBO Max, which is now just going to be called Max. That combination of Warner Brothers and Discovery, we think, is phenomenal. I mean, the content that they're able to provide on that single Max platform is very tough to beat. Disney, is probably the other name that comes to mind that has that kind of content. And we think they're just getting started, and they're gonna catch up to the big boys quickly. And one idea we've been throwing around is if they bought Paramount would be really interesting. That combo could be a tough competitor.
Okay. That would be neat. Let's see. We heard it here first, right? Final quick thoughts, Ken, as you take a look at the competitive space.
Yeah, I would say one area of exploration is live streaming, live sports. I think that is always something that attracts advertiser dollars. We're seeing that across the board from a number of companies investing in sports rights. So I would keep an eye out on that across a number of these services as they look forward to growing their businesses in streaming.
And then they had that glitch on the Love is Blind reunion show. Everybody gave up their Sunday. I mean, that was like a disaster for some. No one wants, no company and no viewer wants that, right?
That was a tough moment for Netflix, and they had done well with the Chris Rock special. So this one they'll have to learn from themselves. But I think in general, they're kind of in this beginning stage of live streaming. They're in the beginning stages and phases of advertising. So they've got a strong customer base that they can continue to grow.
All right. Ken Sue, Tremor International, Doug Astrop, Exponential Investment
Should you say
Partners.
quickly right there?
Thank you both very much. That's going to do it for us here on the Watch List. I'm Nicole Petalides. Thanks for being with me every single weekday at 11 a.m. and 2 p.m. Eastern Time here on the TD Ameritrade Network. I'm seeing the markets back under pressure in the red a bit here. Market on close is next.
Jamie Dimon is to be questioned under oath for up to 7 hours over 2 days in depositions for lawsuits accusing his bank of complicity in sex trafficking by Jeffrey Epstein. GME got a bounce with SPY there. Yep. Might start using that. That is resistance now, though, that channel. Back in its descending channel. Descending channel bullish, if it breaks out to the upside. But as it's descending, it's losing price. Depends on which way it breaks. It did break out to the upside, but now it dropped back into it, so it's bearish, I would say, at this point. It's more or less just to give you a range. I bounced back up through VWAP there. GME is not yet above that little channel. Could be a descending wedge. Seeing it more as like a channel. I'm not used any websites for support and resistances. I guess there's ones that give you that. Never done that before. Dude, look at this consolidation on Bed Bath. This is crazy. Getting tighter and tighter.
So, there's a little catch though, because we actually really haven't broken out of any of these major ranges. The dollar's still holding the low on the year, which is pretty amazing considering other central banks are doing 50 basis points when you go across the pond to Europe. And the 10-year hanging out at 3.5, while the 2-year starts to move up again. One could argue that the response by the market to the regional bank panic and interpreting that as a catalyst for the Fed to slow its aggression, investors have piled back into stocks. We got the move down in yields from 4%. So by some definition, financial conditions have loosened. And that could actually stoke inflation. The stock market's at an incredible level right now. You may not see it with the S&P 500 right now sitting at 41. But if you look at tech, the sector, over the past year, we're at 1-year highs almost. This is pretty amazing stuff. So the idea that we had an economic event scary enough to push the Fed off of its hikes, which then caused people to rush back into speculative risk assets, have we just evened it all out? I think that's where the bank earnings become very interesting because there's not a lot of obvious alarm in the banks. The regionals are a bit lower today, and those earnings are coming up. So far, we've gotten the giants. But the giants are telling us generally pretty good things. JP Morgan and others have generally caught the flows of smaller banks. JP Morgan's back near the highs. That stock has almost erased the sell-off associated
fully bounced back
with
up there.
SVB's
I don't know what the
collapse
drop
in
is even
California
for.
bank panic. So right now, all that discussion about an economy that was going to take a major hit and the notion that credit conditions would tighten in an extreme way and financial conditions would tighten as a result from the bank fallout. So
we've
far,
looked at DNA before.
what we've gotten is a big stock rally.
Yeah, it's
near
barcoding.
breakout in technology companies and
That's what
high
BY
valuation
did.
risk assets.
It's good, it's cheap enough.
A very
Has like a
peaceful
barcode
bond
algo.
market at 3.5% in the 10-year.
Seems.
Doesn't look like much stress to me. Not to mention bank
I've only
earnings,
been watching
where the biggest
BBBY, but
companies are going to
when the
act
volume got low.
as buffers and perhaps benefit from the situation. That all pushes back in a pretty extreme way, I think, on the notion that the Fed has to pause. Let's bring in Kevin Hanks, Renita
It's
Young.
barcoding.
Let's talk some more about some of the moves here this afternoon. We're talking a lot of this big picture stuff
Where
here
was that,
Renita,
actually?
around banks and earnings and how that's going to play out. But in the background, there's a big
The
rally that's
barcoding
happening in
there.
tech. There's a big rally happening in
Is it
home
above
builders.
$1?
And I think
Yeah, that's where it
pretty
was.
interesting because from
It
the home
is.
builders
Up above $1.
perspective, you're at,
BY was barcoding
companies that are
also.
making 1-year highs right now. Doesn't exactly tell
Then
us
once
a
we add
story
another decimal
about an
point,
economy in dire
stops
straits.
barcoding.
That's exactly right. And so we just see a lopsided economy that we've seen that's been leading
Well, hopefully
on the data.
we don't hang around $1 much. We just kind of go past it.
Over the past, I don't know, the greater part of this year for
Higher
certain,
console is
but
higher
really more
goes.
than
Is that how it
6
works?
months now.
Yes.
More than about 8 months when we look at it. But home builders are performing well today, and it's on the back of
You're
that
so wise.
housing data that came out this morning, housing starts and permits, which both came in better than expected. So if we were to review the numbers from March, starts came in at 1.42 million. That was above estimates, but slightly lower than the prior year. And permits came in at 1.413 million. That was actually slightly below that estimate. And yeah, slightly below the estimate and above the prior year, below the prior year, pardon me. But just yesterday, the Home Builder Sentiment Index rose for the 4th straight month in a row. That's really positive sentiment, and you can thank the lower interest rates that have been happening, lower than last December, I should say, lower than last December, because rates had peaked to about 7% when it came to mortgage rates, right? But this is also likely why Pulte Group is higher today. It's actually seeing a new 52-week high, and it's expected to post earnings on April 25th, so we should hear a little bit more about what's been happening with this company in the quarter. And analysts are expecting earnings per share of about $1.78 on year over year, or on revenue, I should say, of slightly higher. Now, the earnings of $1.78 per share would represent about a 2.7% year-over-year decline in Pulte Group. But
The
we'll
market's
see.
fine with that.
The market seems like it's fine with that, right? Because it's better than feared at this point. And who knows if there'll be a surprise to the upside or not. But we do know that its home building peers are up today as well. D.R. Horton is up, so is Lennar, KB Home, and even Home Depot and Lowe's have been a little bit higher today.
It's pretty amazing stuff. And to your point about the shift in mortgage rates being a major catalyst to this, previous reading for the starts as well were revised higher. So the fact that we're getting a couple months of this in a row seems that the market is really kind of loosening financial conditions in a way. People buying houses, I mean, this is a major aspect of wealth, of course, where you've got home builders making 1 year high. I mean, if Pulte Group breaks out, we're talking like a record, okay? So this doesn't exactly fit. I think we got Kevin on the line. Mr. Hinks, we got you, host of Fast Market.
Kevin Hinks is here, Oliver.
There
Welcome
he is.
back.
So, Kev, I mean, look, how can somebody here say that the Fed needs to totally reverse what they're doing and pause when you've got home builders breaking out? I mean, what is this narrative that people have been trying to tell us about financial conditions tightening? I mean, is this not evidence that the market's telling us it's the opposite right now, that we've gotten some kind of like a stimulant the last 6 months?
Well, the home builder sector is an interesting sector, Oliver, because since 2008, the estimates are that the U.S. is short or undervalued by 5 million homes.
Right, the supply thing.
So,
yeah, not enough supply.
Right. When it's a supply issue, and it's an overall, and we still haven't caught up. And higher interest rates or spiking interest rates that we've had throughout the last year have caused a bit of a pause. And you and I have talked about this. When interest rates start to simmer down or be less volatile on the upside, people come rushing back to the house market to try to catch up on the number of houses. So that gives demand to home builders, that gives demand to mortgages, that gives demand to overall activity for both for new and old and used homes. So I just think the housing market is its own unique atmosphere where the fundamental
You missed
problem
Barcode on
ever since the
BBBY?
housing crisis
You weren't watching it when it was above $1?
significantly behind on
That's
the
depressing
supply
for us.
of homes for U.S.
Sure. Well,
Us
we
that have
also
been in
know
it
that
for
there's, I mean, it may not happen overnight,
longer.
but is there not a very sound logic to thinking that the strength in some of the housing that's coming back here will have broader inflationary implications that the Fed's trying to combat? We saw the drop in yields, mortgage rates go with it, people start buying homes again.
Yep.
Others are able to refinance relative to what they could have done, at 7%. This is now a relative, value for them. And then at the same time, when somebody buys a home, they got to fill it up with stuff. I mean, it's like we're going in circles here. So how is the Fed supposed to look at any of this information we're getting on housing and feel worried about hiking rates another 25, maybe 50, maybe another 25 after that until inflation goes down?
Well, you're right, and that's why you're seeing the Fed speakers, Raphael Bostic this morning, holding steady about rates not only going above 5%, but staying there for longer. Raphael Bostic made some interesting comments today. He's worried about that 3 to 3.5% level of inflation. He thinks it may get real sticky right around there. And that final point.
That's why we haven't rallied yet.
From 3 or 3.5 to 2% in inflation, he thinks that'll be the most difficult ground to gain on inflation. So, he was very persistent in his view that rates have to stay higher for longer until we get inflation all the way down to 2%. It was a kind of a fascinating, but you haven't seen other than Austin Goolsbee, you haven't seen members of the Fed waver at all on how the fight against inflation and how interest rates have to stay higher and stay there, Oliver.
Mm-hmm. All right, well said. I like that point. Hey, Renita, before we continue this conversation with our guest, just another story from today that I think deserves a quick mention because we've got some airline earnings coming out. Southwest had a major flub again.
A huge major flub, but it wasn't as big and bad as the one that happened in December, right? Okay. All flights were grounded for a short while today, and by the mid-morning, they had been back up and running.
Jim.
But FlightAware says that as of mid-morning, Southwest had canceled just 9 flights, but over 1,700 were delayed. That's about 41% of its schedule, and because of a technical issue with one of Southwest's internal systems. But the company now says that it's dealt with that issue. The stock fell by as much as 2%, but right now it looks like it took back some of those losses on the day. Maybe it'll even can take back all of them before the end of the day. It's definitely not the same situation from December, though.
Okay. Yeah, market seems to be processing it right now. And a little earnings getting ready for tonight. So we've already got a few in the bank, and watching the airlines try and stay firm despite this from Southwest. We'll get United tonight. Shares at 2%. Had a report.
Yeah,
Delta
it's been
hanging on there, so the group's
extremely
doing all right.
resilient to
Appreciate it very much, guys.
the
Thank
drops
you.
today.
Renita Young, Kevin Hanks. Nice start to our show here, figuring out what's going on. Some of the stock specifics. Let's talk some more of the big picture around banks and the regionals in specific, as we've got earnings, of course, now underway here for the financials. Stephen Kelly's with us, researcher at Yale. He's a senior research associate at Yale's
get
program
margin on
financial
Fidelity.
stability, and had some
Ask
of the
me
best
how I
early
know.
riding on the regional bank panic or the California bank crisis, but either way, it feels like it has to be something specific and somewhat isolated, Stephen, so far. What is your read now that we had a couple weeks removed here to assess the fallout?
Yeah, it continues to look like, you know, the contagion of this thing was really around a business model. We saw the crisis sort of spread from SVB to banks that looked like SVB. And you can contrast this with 2008, which was, you know, we sort of saw a bank fall and then all eyes were on the next biggest bank.
It's a good question.
And we're really not seeing that. Rather, we're seeing sort of contagion flow, you know, towards similar business models. We're seeing stability flow upward. JP Morgan saw deposit inflows. We've seen, you know, upside surprise profits from B of A, from Citi. So this really is a story of stability at the core of the system and a run on
So
sort
for
of
like
a
each
business
individual
model. And we'll, you know, it
contract,
remains to be seen what will happen with
just get a
First
chart.
Republic, you know, and sort of maybe some of the other
This
banks
is
that
the
look
50
like
cent
it. But the core of the system
weekly.
continues to look solid.
Here's the price of
I
it.
want to talk a little bit about some of your early diagnosis.
And here's the volume down
I think
here.
some of this now we've moved on from to some degree, but it's worth revisiting
Like a normal
here.
stock chart.
Because right now we're kind of puzzling over some of the macro, it seems, occurrences after this. The government's response to support the banks that really blew up. The money kind of finding its way up to the big banks, like you said, kind of acting as a bastion. The market now is like almost in a stimulus mode.
17,000.
But we'll get to that. Let's talk
Yesterday,
micro
this
for a
50
second,
cent
because you
call,
wrote a post that said most folks were misdiagnosing
72,000.
What in your mind do you think we can say was the issue?
So this was really, like I said, about a business
Today's only
model.
at 17,000.
There's nothing wrong inherently with being a bank that says, look, we're going to bank what Wall Street refuses to or doesn't understand. But you run exactly this risk, which is that your customer goes through a cash burn and effectively the liability side of your balance sheet disappears, and you no longer look like a useful business model into the near future.
But just underestimated.
And the run is on at that point. And so again, that's not the business model of the street. Again, you can tell a COVID story. You can tell
Thanks,
a
Jason.
2008
Appreciate it,
story
buddy.
where
Have a good day,
the run
man.
is really on the business model of Wall Street. And this just wasn't that. So much of the story of SVB and the banks like it is sort of this specialized service and this really catering to their customers. And so if you're sort of sitting there and you see them release an emergency statement, you see them release an 8K, you go, look, they're not going to be here for me. Why am I risking it with sort of this sort of different bank,
71,000
this less steady
volume
bank
on the 50 cent
if they're
strike
not
for
gonna be here
weeklies
for me in the
yesterday
long
alone.
term. So that's really the story here. Sort of a failed business model, and as we've seen earnings come out from the street, we've seen stronger business models, diversified business models, and that's what we see in crisis, right? We sort of see balance sheets aggregate, smaller firms get bought out or merged. We saw the big banks stand behind First Republic and stick $30 billion inside First Republic, and that's sort of what's kept them on a lifeline since. So, the more aggregated the balance sheet, the more stable you are in an environment like this, and the stronger business model you have.
Married, but yeah.
The biggest risk of their business model was it
They
client
don't give you margin for that anymore.
Yeah, exactly. Basically,
I mean, you can just get margin on Fidelity. I bought shares of margin. That's why I was cutting out so quickly.
And this idea that like you're going to
stomach the loss with margin.
a risky industry, a totally cyclical industry in venture capital and tech, and the Fed just went after that industry with interest rates, and so it just no longer looks like in the sort of the short to medium term that's looks like a good banking model. I mean, who wants to be a banker to tech at this point in the cycle?
For the price points completely.
So that kind of begs the question, though.
Like
then
below
if,
23 cents.
Other banks have big unrealized losses
TD,
that they don't want to tap into, and if the client cash bleed of their bad assets, those clients
Fidelity
were in the
gives margin
VC
on a
and
lot.
the tech and crypto stuff that kind of lit the fire here.
I might not get on other ones. I'll get on Fidelity. I got margin for GME on Fidelity too.
Rates go back up. And a year from now, it's not just the speculative tech and the froth that's been wiped out. What if it's the majority?
I mean, yeah. I wouldn't say just because there's a lot of volume, it's automatically a bait and it's going to plummet. But yeah, I don't think that 50 cents are going to go on the money or close the money.
It's sort of the built-in beauty, I guess,
John
of the
Parker,
situation.
thank
for
you,
the
sir.
Fed, in that this is not
Appreciate
a story of credit losses, and this again is a story where it's good to be big.
Superman
because,
to the rescue.
The system can sort of let small banks go, but to the extent that this becomes, like
Thanks,
you
John
said,
Parker.
to the extent
Appreciate
we
it,
get
man.
into a further bear market, to the extent we get into more trouble, and it goes beyond the tech sector, what we'll see is interest rates start collapsing again. And we've seen this a little bit, and this has been borne out in the earnings that we've seen so far, which is that
It's funny on Restream. It says pair character flying in the air with a red cape and a smile on his face.
So the moment this becomes an actual financial
Pretty much.
stability event, the Fed is going to be expected to cut rates, and all these bonds
They
will
closed your
reprice
account
and the
after
system will
DRS? What do you mean they
recapitalize.
closed your account?
So we might lose another small lender here.
Did
or
you
there,
take out
as
all of
soon
your
as it
assets that
becomes
were in there
systemic,
in that brokerage?
The situation will sort of solve itself.
Okay, well, bingo, here we go. Now
All
we
your
transition more to
capital
that
and
macro conversation
assets?
I wanted to get to. So at this point, did the market, to continue with your phrasing of misdiagnosing, did the market also make a bad conclusion about what this means for the central bank? I don't know if that goes beyond your realm of research or maybe your own personal thoughts, but it seems like the investing community and the market itself looked at what happened with those few banks, those problematic banks, and believed it would be enough for the Fed to actually have to change course. But is that the case?
Yeah, I think to some degree.
For sure, Trace.
I don't think the Fed is at the nuclear option yet of going back to the zero or bound interest rates or anything like that. But we've heard from Fed officials so far, and what they've said is like, look, this banking stress probably
that's a normal thing.
Worth an interest rate hike or two.
You don't have anything in the account that they would.
Like your previous guest said, there's a little bit of difference sort of growing amongst the FOMC. Some folks want to pause, some folks want one more, but what they've been consistent on is, look, this banking stress did some of our tightening work for us. So just as a matter of fact in their eyes, this is going to take a little bit of pressure off rate hikes and probably lead to sooner cuts.
Okay. Stephen, thanks for the thoughts. I'll certainly be in touch. Really like the research.
Thanks.
Absolutely. Stephen Kelly, Senior Research Associate at Yale's Program on Financial Stability, looking at promise still being somewhat cordoned off to a business model gone wrong. As we see for earnings, it seems like there's a good evidence to Stephen's point. With,
Thank you, Ace, for that $10 dono, man. Appreciate it.
As they report. When we come back, let's talk some streaming stocks. We've got Netflix after the bell.
Legend. You legend. If 0 in 10 years, never had to call to reopen it? Is that a different brokerage at a different time? Do I get an M&A? Yeah, that would be legit. Even without that though, I still see 3, 4, 5x return from here. Pretty likely, I suppose. Jeez, he had such a long interview. Poor guy. Or testimony or whatever it was. Which always a good safe strategy in the means of shares. true. Alt hedging, okay. Or shares and covered calls. YOLO or no YOLO, Happy? On BBBY? Do it. I'd save some buying power for tomorrow, though. And the next day. And the next day. And Friday. Because if we do get a big rally this week, bigger than we've had, we'll probably try and drop it on Friday. Especially if it's over 50 cents by then. An old Scott trade account. Yeah, so different brokers, different terms. Run differently. Oh, why did I take a short on that triple top on SPY? Not this week. I don't know. I mean, the option chain can get loaded up very quickly, as we saw. This went from 30,000 to 90,000 in one day, one trading day, 125% day. And next week went from, I don't know, 10,000 to 40,000. So even if we don't start getting some positive gamma pressure on the market maker, or delta pressure, whatever you call it, it can happen another week, and it can ramp up quick. The calls, the options are so cheap. We're reading now. I'm not reading anywhere about an M&A. Sometimes I'll read Reddit, but I don't have like hopes for that. I don't have expectations, I guess.
Ad tier, the lower priced ad tier, which is still very much in its early days, but could be a big opportunity. The other is the crackdown on paid sharing in the attempt to try to capture more of those subscribers through those efforts. And so I think it's still early days on both of those. They have, started to put out in some of the markets that they're in, some of the attempts to kind of capture that paid sharing subscribers. The major markets in the U.S. is probably still more Q2, early Q3. So I think the market's going to be looking to see kind of how did those initial runs all of them, I guess, but go.
Will it drop like we would see on GME?
Through does that give for larger markets as they roll this out throughout the rest of the year?
What tolerance
it doesn't move with the SPY for one.
Right now for any surprise,
so that's one thing that's helping it.
Growth. We
not necessarily drop on SLD.
Where they actually
there's a drop on SMX.
What's the possibility of that coming
if
back?
I can take a short on here
at this juncture.
Yeah, I think this is why they're being cautious in the way they're rolling out the paid subscriber
so liquid, I'm not gonna do
new policies, right? So. Our expectation is not for Q1 to see really a change in trend.
All the way perfectly to this resistance,
in terms of
2706.
subscribers. I think where there is a little bit more of a risk to that is as they roll out these new policies. There's definitely, as there's been rumors of kind of what those would be like, there has been a lot of noise in the media and customers and on Twitter and whatnot. And so I think they are very reticent.
Yeah, GME is fully backing that channel.
Kind of spook subscribers, and kind of managing that process. So I think the market would not look kindly on anything that's going to hit subscribers and more so revenue because at this point,
we needed a breakout to get that much volume. I think
new model and kind of going after paid subscribers or sharing. I'm sorry. They're really focusing on kind of maximizing the revenue and obviously pricing. And these new kind of pricing mechanisms are a big part of that. So I think the market would be a little bit forgiving as long as they are getting the the pricing that goes with it. But obviously, that's going to be a big thing that we're going to be looking at this quarter, more so in kind of their forward-looking guidance on that, but definitely into Q2 and Q3.
Okay.
Pre-market on the
and
4 hour.
For the, bottom line, Jawad, what's the standard here for Netflix at this point in terms of profitability and
you're talking about this.
Cash flow as far as the actual bottom line goes? I mean, a lot of this still seems to be a market very concerned with the subscriber rates and what they're paying, and are they paying once or twice? But what about bottom line? What about potential for this to become a dividend payer one day?
2 weeks isn't long term.
Yeah, so
But yeah, you could.
One of the reasons
SLD is usually kind of a sell-off period for SPY.
Got
a lot of earnings though. If you're bearish on earnings, safe way to play that would just be to
kind of manage
SPY puts, I would suppose.
And especially
Netflix, all these big ones that move the market.
Meaningful cash flow, and we saw that kind of that path start in 2022, even as growth slowed. The management of the cost and kind of the reassessment of how they were spending on content to be more efficient.
Really not before, after hours.
Really propelled their
the upside of the channel.
About $1.6 billion.
GME was just in it
last year. They gave guidance that they would do at least $3 billion of free cash flow in 2023
broke out of it.
and continued improvement
thereafter. Broke out of it.
So I think that's going to be a big part of the story.
Broke back into
it. The market cares about the revenue and the growth and the overall total market, but I think one of
the channels kind of where it got volatile down. That's where SPY dumped. It broke through it
ability to demonstrate
and bounced right back up to it.
Manage their cost structure to generate
kind of more or less
sustain and continued growth in their free cash flow profile. And I think, look, from our perspective, that's
look to see if it bounces on the next down leg.
Kind of thing that we're looking at for the entire
20
industry,
and a
right?
quarter,
and
maybe.
Is the bellwether for the entire media
Depends
industry,
on when it does
especially
it.
all these legacy media companies that are now transferring and
takes.
transitioning into streaming. The ability of Netflix
Copy
to do
or
this
rippy?
is somewhat positive signs that others can do it, and so any potential hiccups on
it might
that
just
path
consolidate.
is obviously
Till
something that we're
close.
going to be
Got about 30 minutes here.
To the broader industry, but so far, at least in the guidance and kind of what we're seeing, it looks like they are managing kind of that transition, and they are.
Yeah, it got backward in the downward channel because you sold Ace yourself, flushed it into the downward channel.
Like up and up here for Netflix with the caveat that they still need to prove out their subscribers in this new model.
No, it's not. I still look at GME.
The expectations setting.
I got puts on it. You still trade it. You could short it. Ace, you could take all that money and short it. How about that? Use this margin to short it.
Two of the key upgrade that he mentioned.
Talk about flipping rolls.
Stock. All right, when we get back, let's trade it. Tom's got bearish options trading Netflix.
It also broke that kind of horizontal support today, 28 or 2183 or so.
Options trade market still pretty much.
So I'm not sure how fast it'll come down if it actually picks up velocity. But it looks like momentum's down. Velocity's been just crazy low on GME. It's all short GME. GME's still listed, yep. Apparently so. It's hard to tell though, it doesn't look like it's moving. Looks like beakish. Now it's rounding down. What's beakish? Best path and beyond just above VWAP, up 15%. That's all it needed today. Totally content. Solid being forming for sure. Tried to get some exposure on a firm upside, but never got filled. Toucan bird beak. I see it. What's in a 1 to 3 minute? Like 17 puts. Look at you looking at options. Do it. Don't do 17. No, don't do way out of the money. You want your puts in the money. If you're just starting out, go long. You're gonna go long on options. Buy them at the money or in the money. And get time. Get at least a month. I would start by going short on options. Before options, shorting shares would probably be even wiser. Learn about the short side. Keep it simple. Up is up 5%. This thing's looking pretty good. Looking pretty bull flaggy. High of the day, but I kind of want to buy some. Top volume for today. See, this is when you want to see a double doji. See, this was a good reversal sign of a candle. So after we have a bounce, then C1 is kind of and on increased volume. That is the breakout, dang it. I'm trying to put a note. Maybe it'll sell off tomorrow, pick some up. Hate buying things at the high like that. Okay, I'm gonna do a little video. Got time today. Almost active on Webull. I bet. 228 million. Love my videos. Shorting is very easy. It's just the opposite of longing. You just sell it. Like on GME, instead of going buy 100 shares, just go sell. Same thing. And I just do it. That's it. Okay, guys, I'm gonna take off, do the video. We'll see you guys on Discord. See you on Twitter. Thank you, Ace. All your memberships gifted, your donos. Incredible generosity. Appreciate it, man. Thank you, John Parker. Thank you for your donation as well, sir. Thanks for all the support, guys. Thanks, Dink, Rally, Ace, Kitty, Gene, Juan. Nice day here on BBY. We'll do a little recap. Show you guys what I got. A little bit of TA. And yeah. Thanks, guys, for watching. Thanks for joining. Fun time. See you in the after hours and beyond. Peace out. Thanks, Trace. Thanks, Julian. See you guys.